Good afternoon, ladies and gentlemen, and welcome to the opening International Conference of Portugal Capital Markets Day of 2025. My name is Matilde Pérez. I'm Policy Manager of IAM, the Portuguese Issuers Association, and I will be your host this afternoon. It's a great pleasure to see so many familiar faces gathered here at Junte-se in Lisbon for this event dedicated to exploring Portugal's position as a prime investment destination. This gathering brings together leading figures from government, finance, and industry, who will share insights on how Portugal's innovation ecosystem and infrastructures are shaping our country's competitiveness and growth. Thank you all for joining us, especially those who travel from abroad to be part of this important conversation. To officially open our conference, please join me in welcoming Isabel Ucha, CEO of Euronext Lisbon, and then Miguel Ataíde Marques, Chairman of IAM, the Portuguese Issuers Association, who will set the stage for today's discussion.
Muito boa tarde a todos. Good afternoon to all of you. I'm really delighted to welcome you all to the second edition of the Portugal Capital Markets Day. And I'm very happy to co-host this conference with the Issuers Association. And thank you for the opportunity of doing this together. Of course, my first words are to deeply thank the Prime Minister of Portugal, Luís Montenegro, for being with us today. It is a great honor and privilege. And I'm also very happy to be in this magnificent venue, the auditorium of Junte-se, and I take this opportunity to thank our host, Paulo Macedo, CEO of Caixa Geral de Depósitos, who will also address this audience later today. It will also be a great pleasure to hear Luís Lajinha de Souza, the president of CMVM. Thank you so much also for being with us and sharing your views. He has always been a great defender of Portugal and the development of Portugal in the global arena. What is the Portugal Capital Markets Day? Why did we decide to organize this initiative? The original and main objective of this two-day event, it's a two-day event, is to attract investment, improve liquidity, and foster valuation of the Portuguese listed companies. So that was the first reason why we started to organize this event. But indeed, our ambition has grown larger. And we have formatted this initiative to become really a deep zoom on Portugal, a zoom on the Portuguese economy, showing the profound transformation this country is going through, some of these transformations not so visible or not so well understood. I mentioned this is a two-day event. Today we are organizing this conference. Tomorrow, 55 institutional investors, mostly foreign investors from 11 countries, Spain, France, Belgium, UK, Italy, Switzerland, Finland, Singapore, and the US, will have over 260 individual and group interactions with Portuguese companies, mostly listed but also non-listed. And still tonight, these investors are meeting our Minister of Infrastructure and Housing, Miguel Pinto Luz. We wanted to demonstrate to existing and potential investors in a fundamented and rigorous way how Portugal is progressing in critical areas of competitiveness, such as innovation, talent, infrastructure, and as I said, some of them not so well understood, because also some of them are recent. And we wanted to document these investment opportunities that are ahead of us. So we are so proud to present today, firsthand, the report, Portugal as a Prime Investment Destination, Infrastructure and Innovation at the Core, which was directed by Professor Felipe Santos and elaborated by him and his team in Universidade Católica. The report that many of you have received, I hope all of you have got when you entered this conference, and if not, please ask for a copy because I think it deserves to be looked at. The Savings and Investment Union are today at the core of the European competitiveness agenda. Europe has understood that playing in the global innovation game requires a stronger financing toolkit, namely more relevant, efficient, and integrated capital markets. But the success of the Savings and Investment Union also depends on the vision and commitment of the governments in the different countries. This is a very big ambition, but I would highlight just 2 blocks today because they are the ones we may be able to address. The first one is the simplification agenda, and we will have a panel which will address this topic. And I would say the other one is what I call the incentives agenda. The Commission has recently advised member states to adopt, among other initiatives, savings and investment accounts. We believe that this is a very relevant initiative. It has proved to work, namely in Sweden. And just to leave a figure, in 2012, there were just 200,000 investors in Sweden. Today, there are more than 4 million, which is almost half the population of the country. And with it, the whole culture of risk and entrepreneurship has developed. And this is what is still lagging or lacking in some countries, namely in Portugal. Euronext is fully committed to the agenda of the Savings and Investment Union, and we make integrated capital markets for real. We do integrate markets across Europe. We have integrated already 8 countries. We are on our way to the 9th country. And this is across Europe and across the whole value chain. Listing, trading, clearing, settlement, and custody solution. And we are offering this fully integrated value chain for a significant number of assets. Equities and bonds, obviously very important, but also derivatives, forex, commodities, and energy products. And Portugal benefits from the existing of this integrated and sophisticated infrastructure. I also would like to say that Euronext is also the example of how attractive Portugal can be for foreign investment. We have built in Portugal one of our leading technology and business centers in Porto, as you might know, and we have just inaugurated a month ago our new facilities that accommodate over 500 employees these days. Finally, this event would not have been possible without the support of our main sponsors, A1 and other supporters, JP Morgan, VDA, and PwC. Thank you so much for your support. And of course, without the dedicated work and professionalism of the teams of Euronext and the Issuers Association, IAM. Thank you so much to all of you. Thank you for being, all of you, with us today. I wish you a very productive afternoon, and I leave you with Professor Miguel Ataíde Marques, the chairman of the Issuers Association. Over to you, Professor. Thank you.
Muito obrigado, Isabel. Boa tarde a todos. Good afternoon. Welcome. His Excellency, the Prime Minister, Dr. Luís Montenegro. Welcome to the President of CMVM, the Executive President of Caixa Geral de Depósitos, board members of national regulators, my dear colleagues on the board of IAM. Greetings also go to the participants in the panels of this afternoon and to the authors of the study that will be presented here by the Dean of Católica Lisbon. And greetings to all the participants in the conference joining us today. A word of thanks goes to the sponsors of the event, namely AON, JP Morgan, PwC, and lawyers Vieira de Almeida, for commitment to the development of the capital markets in Portugal. And finally, allow me a warm word to my friend Isabel Lucha, CEO of Euronext Lisbon and Executive Board Member of Euronext Group, Euronext NV, with whom we organize this suite of events today and tomorrow. I extend my appreciation also to my colleague Abel Ferreira, Executive Director of IAM, and to the organizing team led by Matilde Pérez. The Portugal Capital Markets Day 2025 is an international event spanning 2 days that seeks to position Portugal as an attractive destination for both domestic and foreign investment, and to reinforce the strategic role of capital markets and what they can play in financing the Portuguese economy and enabling growth of companies. This event comprises several key moments, including a full day tomorrow dedicated to meetings between Portuguese companies and investors. Over 250 interactions have been organized through one-on-one and group sessions. A AEM, Associação de Empresas Emitentes de Valores Cotados em Mercado, or simply Portuguese Issuers Association, firmly believes in the essential role of publicly listed companies as drivers of sustainable and competitive economic growth. Typically, these are companies that invest, innovate, offer skilled jobs, internationalize, and give scale to the Portuguese economy. And it is also our strong conviction, particularly in the current European and international context of deep and swift transformation, that any meaningful discussion about the future of the Portuguese economy must place greater emphasis on the capital markets and on the long-term productive investment. In reality, capital markets bring diversification to the funding sources available to companies, reinforcing their strategic autonomy. Capital markets also build sophisticated ecosystems that create good jobs and attract talent. This conference adopts a broad approach to capital markets, embracing both public and private segments. After all, the aim to improve the access of companies, including SMEs and startups, to long-term financing so that they may invest and grow their businesses. This view of combining public and private markets is in line with the spirit of the Capital Markets Union, which implies that sources of capital for companies today, beyond the commercial banking system, are manifold. They include organized markets, the stock exchanges, private equity and venture capital, startups and scale-ups, alternative investment funds, and so on. Capital markets should not be viewed as a sector apart from the real economy. They are essential engines of growth and value creation, transforming savings into investment, innovation into value, and wealth that can be shared across society. This is with AEM. This is the reason why AEM maintains that the development of capital markets must be regarded as a national priority. We continue to support the agenda of EU Commissioner Maria Luís Albuquerque for the creation of savings and investment instruments and for achieving clarity and integration of markets at European level. We also continue actively contributing to the European Union-wide debate on regulatory simplification, good practices of governance, and adequate standards of sustainability. In this context, we trust that this international conference, which opens the Portugal capital markets today, will be a key moment for dialogue, cooperation, and confidence building. Portugal is through a very positive path that is enviable to many outside our country. This is a formidable opportunity for advancing our global competitiveness and standards of living. Let's not miss that opportunity. Thank you. Now, allow me, Mr. Prime Minister, a final word. A deep sorrow and heartfelt sympathy in remembrance of IAM Supervisory Board Chairman, Dr. Francisco Pinto Balsemão. A towering figure in Portuguese public life, Francisco Pinto Balsemão kept an unmissable presence in the defense of freedom, democracy, journalism, entrepreneurship, and innovation in Portugal and abroad. He was one of the founding members of IAM, and before chairing the supervisory board, he chaired its board of directors. He was a friend, always available and positive. His vision was enlightening. His energy was contagious. We pay tribute to a life dedicated to public service, to freedom, and to the consolidation of the Portuguese democracy. His absence will be felt, his memory will be honored. And now it is my honor and privilege to give the floor to His Excellency the Prime Minister of Portugal, Dr. Luís Montenegro, whom we thank for taking the time to be here with us today. Thank you, Mr. Prime Minister.
Muito boa tarde a todos, Sr. Secretário de Estado do Tesouro e das Finanças, Chairman da Associação de Empresas Emitentes de Valores Cotados em Mercado, CEO da Euronext, Sr. Presidente da Comissão Executiva da Caixa Geral de Depósitos, minhas senhoras e meus senhores. Dear guests, good afternoon. I would like to begin by expressing my sincere appreciation to the organizers for bringing together such a group of speakers to address a topic of great importance for the Portuguese economy. Portugal stands today as a prime destination for investment. This government remains firmly committed to improve the country's conditions for business, a place where firms prosper, wages grow, and social well-being continues to advance. Portugal has been very successful in attracting foreign investors, good signs that we are on the right track. But make no mistake, we want more. We want really more. We are firmly committed to transform Portugal, make it one of the most vibrant and dynamic global hubs for emerging technologies. Ladies and gentlemen, having shared these opening remarks in English, allow me to continue in Portuguese. Minhas senhoras e meus senhores, queria partilhar convosco breves notas sobre a situação económica e financeira de Portugal, podendo com isso favorecer a reflexão que aqui vão fazer nestes 2 dias e desejar que os sinais que temos vindo a apresentar de estabilidade política, económica e financeira de Portugal possam ser uma base para bons negócios, para bons investimentos, para maior dinamismo do mercado de capitais enquanto instrumento de financiamento da nossa economia. Como sabem, apesar do contexto internacional incerto, a economia portuguesa tem vindo a apresentar sinais muito positivos e sólidos em termos de crescimento, em termos de estabilidade. Para 2026, temos previsto um crescimento do nosso PIB de 2,3%, sendo o 5º ano consecutivo em que o país crescerá mais do que a zona euro e mais do que a União Europeia. Estamos com uma situação de praticamente pleno emprego, com níveis da taxa de desemprego historicamente baixos, em torno dos 6%. Temos previsto superávit orçamental no final deste ano, de 2025, e também, apesar de todas as dificuldades e desafios orçamentais em 2026, é nossa expectativa continuarmos e alcançarmos um equilíbrio das nossas finanças e, portanto, termos um superávit orçamental de 0,1% do PIB em 2026. Eu sei que a este propósito há dúvidas, há quem tenha expectativas um pouco mais comedidas do que aquelas que o Governo tem apresentado. A economia não é uma ciência exata e a perspectiva orçamental está sempre baseada em pressupostos, está sempre baseada em determinados comportamentos da economia que convergem e se interrelacionam uns com os outros e, portanto, as previsões são sempre passíveis de serem alcançadas, tal qual foram antecipadas, de serem superadas nos seus resultados ou então de não atingirem os seus resultados. O que eu posso dizer, mais uma vez, é que sem nenhum tipo de arrogância, pelo contrário, com os pés bem firmes, sabendo o caminho que estamos a pisar e a percorrer, o que eu posso dizer é que até hoje, sempre que houve perspectivas anunciadas pelos governos que dirigi e dirijo, sempre que foram colocados objetivos, quando eles não foram alcançados, foi por defeito, foi porque nós os superamos. E, portanto, apresento esse crédito como uma sustentação para que em 2026, apesar de todos os avisos e todas as opiniões em sentido diverso, nós vamos, mais uma vez, surpreender e superar essas resistências em termos de otimismo. E dizer-vos que também na senda desse percurso, que é um percurso que junta crescimento económico e sustentabilidade financeira, nós continuaremos a reduzir o peso da nossa dívida pública face ao produto, que tem tido um desempenho absolutamente notável e que, um pouco por todo o mundo, mas sobretudo na Europa, é muitas vezes assinalado. E é também surpreendente na medida em que Portugal, como sabemos, há cerca de 15 anos, atravessou uma muito profunda crise financeira, no decurso da qual saímos com um endividamento elevadíssimo, que era de 134,1% do PIB em 2020 e que, no final do próximo ano, estamos convencidos, será inferior a 88% do nosso PIB. O que revela uma trajetória, um esforço, de facto, notáveis, que, perdoem-me os nossos convidados estrangeiros, faz corar de, enfim, não vou dizer de vergonha, mas de admiração, muitos daqueles que duvidaram das nossas decisões, do seu impacto e, sobretudo, da firmeza com que, de uma forma geral, o país iria encarar uma nova disciplina orçamental que, não sendo o fim das nossas políticas, é ainda assim o pressuposto para podermos ter um ciclo de crescimento duradouro e mais pujante. E, por isso, não é surpreendente que tenhamos visto, ao longo dos últimos meses, com este desempenho, com esta solidez de trajetória, as principais agências internacionais a subirem o rating de Portugal e, portanto, a darem ainda mais segurança e confiança aos investidores para olharem para o nosso país. E eu estou aqui para vos dizer que nós continuaremos este caminho e continuaremos a juntar a este desempenho económico-financeiro um conjunto de transformações que são elas próprias também a sustentação de um ciclo de crescimento virtuoso e duradouro. Desde logo, aproveitando tudo aquilo que são as nossas características do ponto de vista geográfico, do ponto de vista da nossa localização geoestratégica. Portugal é um país que nem sempre tem sabido potenciar uma localização que lhe permite estar no centro da relação do continente europeu com o continente americano, com o continente africano. A nossa localização é também um ativo económico enorme para poder ser aproveitado e desenvolvido, em relação direta com um outro grande ativo que temos, que são os nossos recursos humanos, o nosso capital humano. E por isso nós temos vindo a encetar um conjunto de transformações que permitem, nomeadamente, dar maior atratividade para podermos reter o nosso talento e para podermos também atrair talento externo que nos possa ajudar a sermos uma economia mais competitiva. Temos vindo a fazer investimentos também muito significativos em setores essenciais a poder redundar em maior competitividade económica, maior autonomia, maior capacidade de dar também segurança e confiança aos investidores. Exemplo disso é o investimento que temos feito ao nível das energias, em particular da energia e da produção de energias renováveis. Hoje, em Portugal, temos cerca de 70% da produção energética por fonte renovável e estamos a construir uma oferta que nos permite hoje já dizer que o custo da nossa energia é o terceiro mais barato da União Europeia e nós pretendemos ter não só maior autonomia, maior capacidade produtiva, como uma relação com o custo da energia capaz de ser também uma âncora para a fixação de novos investimentos, de novas empresas, de maior capacidade da nossa economia, acolher e mostrar os seus sinais diferenciadores para poder localizar mais investimentos. Juntamos a isto uma sociedade coesa, não há um problema de desequilíbrio social em Portugal, apesar de todos estarmos empenhados em colocar o crescimento económico ao serviço de uma distribuição justa da riqueza e, em particular, para ajudar aqueles que se encontram numa situação mais vulnerável, aqueles que estão numa situação de pobreza, a poderem sair dessa situação. Mas, como tenho repetido muitas vezes, só se combate a pobreza criando riqueza. Não há outro caminho. E é por isso que o aproveitamento de todos os nossos fatores de competitividade é tão relevante para podermos ser um país com maior capacidade de criação de riqueza e, com isso, também eliminarmos e erradicarmos os focos de pobreza. E Portugal é também um país seguro. E a segurança, agora aqui na vertente mais estrita do termo, a segurança é também um fator de competitividade económica. É, desde logo, um elemento fundamental à qualidade de vida de qualquer cidadão. É, desde logo, um elemento insubstituível do respeito pelos direitos e pelas liberdades de cada ser humano. Mas é também um ativo económico. E é por isso que este governo tem vindo a dar prioridade àquilo que é uma situação que nunca está garantida eternamente. Há, de resto, países na Europa, que eu não menciono por uma questão de cortesia, mas há países na Europa que há poucos anos atrás tinham uma performance em termos de índices de segurança muito equivalentes àqueles que nós temos em Portugal. E hoje estão muito distantes e é para pior. Porque os fenómenos de insegurança, de determinados segmentos de criminalidade, foram subestimados e, tendo sido subestimados lá atrás, têm uma dificuldade acrescida hoje para serem combatidos. Nós não queremos, portanto, subestimar os sinais que temos de preocupação para garantir que continuamos a ser um dos países mais seguros do mundo por muitos anos. É essa a nossa obrigação e esse também é um fator de competitividade. Minhas senhoras e meus senhores, para vos deixar também à reflexão, eu quero só muito sinteticamente mencionar o nosso caminho de redução dos impostos sobre o rendimento do trabalho e sobre o rendimento das empresas como um esteio da nossa política económica. Para nós e para mim particularmente, a política fiscal nunca foi, não é, um instrumento de política financeira. Inevitavelmente que a receita dos impostos importa à gestão financeira do Estado, com certeza. Mas a definição dos impostos, das suas taxas, a forma como se desenha a política fiscal é um instrumento de política económica e também é um instrumento, já agora, de justiça social. É para isso que os impostos existem. Existem para podermos, neles, alavancar mais a capacidade económica de criar riqueza e para, através das contribuições das pessoas e das instituições, das empresas, podermos também ter uma sociedade mais equitativa e, portanto, socialmente mais justa. Quando nós, em Portugal, estamos a descer os impostos sobre os rendimentos do trabalho, quando estamos a estimular a produtividade dos trabalhadores e quando estamos a diminuir os encargos fiscais sobre as empresas, o que nós estamos a sinalizar é que vale a pena trabalhar mais e produzir mais, porque quanto mais produtivo for um trabalhador, maior rendimento poderá ter do seu esforço de trabalho, e as empresas, quanto mais capacidade financeira lhes sobrar do resultado da sua atividade, mais capacidade terão para pagar melhores salários e para investir em novos meios produtivos, sejam eles tecnologia, inovação, sejam eles melhores tesouraria e liquidez para comprar matérias-primas. É, portanto, um elemento fundamental e é um elemento que nós queremos seja, como aliás este processo orçamental que está em curso neste momento na Assembleia da República demonstra, que seja também um fator de previsibilidade e estabilidade. Não é apenas estarmos a diminuir os impostos, é dizermos às pessoas que o estamos a fazer por muito tempo e que podem contar com essa previsibilidade, porque nós não vamos fazer, não queremos fazer, como durante muitos anos fizemos, que é todos os anos, por alturas do Orçamento de Estado, mudarmos praticamente todos os impostos na Lei do Orçamento de Estado. A Lei do Orçamento de Estado não é a lei da política fiscal. A Lei do Orçamento de Estado é a lei das despesas e das receitas da administração. A política fiscal discute-se fora do orçamento e discute-se com sentido estratégico, com sentido e visão de médio e de longo prazo. E por isso nós nos temos recusado a fazer do Orçamento de Estado o repositório das alterações fiscais de tudo e um par de botas, se me permitem a expressão. Não é esse o nosso entendimento. Portanto, estas políticas fiscais visam dinamizar a economia, visam reter o nosso capital humano e, por isso, também uma última menção ainda neste domínio, ao programa que é único no contexto europeu e mundial de favorecimento dos jovens até aos 35 anos no seu plano de início de vida ativa, tendo um desconto em sede de IRS válido por 10 anos. 10 anos. Os 10 primeiros anos de vida ativa de um jovem em Portugal, neste momento passa por ter um desconto de IRS de 100% no primeiro ano de vida ativa, de 75% no segundo, no terceiro e no quarto, de 50% no quinto, no sexto e no sétimo ano de vida ativa e de 25% no oitavo, no nono e no 10º ano. Este é um sinal, lá está, económico. Este é um sinal de que nós queremos que os melhores fiquem em Portugal e possam colaborar para a competitividade do nosso país. Todas as outras transformações que estão em curso e que também terão ocasião de poder tratar, nomeadamente com o Sr. Ministro das Infraestruturas e Habitação, que também participa nos trabalhos, são importantes. Falo, desde logo, daquelas que têm a ver precisamente com a habitação. Falo, desde logo, de todo o cumprimento dos investimentos públicos que estão no PRR, da nova fase que nós estamos a construir na área da investigação e da inovação, ligando precisamente ainda mais a nossa ciência, a nossa capacidade de investigar com a inovação e a aplicação do conhecimento e do resultado das investigações na nossa economia e nas nossas empresas, e também uma reformulação de todo o setor público, que é absolutamente crítico para a competitividade das empresas. O programa de reforma do Estado que estamos a empreender, de simplificação, de diminuição da carga burocrática, de diminuição da complexidade, da regulação excessiva, tudo isso são fatores que, a par com a digitalização, a par com toda a transformação na relação do cidadão e da empresa com a administração, podem dar-vos ainda mais garantias de poderem apresentar Portugal com uma condição de atração maior para investimentos. E uma última nota para também deixar aqui uma referência que seguramente o Sr. Ministro das Infraestruturas e Habitação pode e deve desenvolver com mais pormenor e detalhe mais logo, mas também ao nível das infraestruturas, a aposta que fizemos em, desde logo, ultrapassar um impasse de 50 anos quanto à localização da nova infraestrutura aeroportuária da região de Lisboa, que o mesmo é dizer do grande aeroporto de Lisboa, que é um aeroporto para todo o país, o desbloquear do processo de construção da ferrovia em alta velocidade e da ligação do nosso país à Europa, o nosso forte empenho, infelizmente ainda não traduzido em resultados muito palpáveis, relativamente às interconexões elétricas com o centro da Europa. Há pouco não me referi a isso, mas será um absurdo para Portugal, para a Península Ibérica e para a Europa que nós façamos um esforço tão significativo para podermos ter maior autonomia energética, maior capacidade de produzir energia por fontes renováveis e depois não podermos transacionar essa energia, aproveitá-la e partilhá-la dentro do nosso espaço. Porque, simultaneamente, perderemos a oportunidade de ter mais energia verde no mercado europeu, perderemos a oportunidade de baixar o custo da energia à escala europeia, perderemos a oportunidade de sermos mais autónomos enquanto bloco comercial e podermos, com base nisso, encarar os mercados internacionais com maior capacidade. Por isso, é também um ponto de que não abdicaremos e que está nas nossas prioridades. Minhas queridas e queridos amigos, se me permitem este tratamento mais coloquial, eu tenho que vos dizer, para concluir, que é por muitas destas razões que hoje ilustram o processo de transformação estrutural e estratégico que está no terreno em Portugal, que traz consigo a confiança dos portugueses. Nós, para além da estabilidade económica, para além da estabilidade financeira, para além da estabilidade social, temos também estabilidade política em Portugal, um bem cada vez mais raro na fragmentada política europeia. Nós temos estabilidade política, o governo atual dispõe de condições para governar, as forças políticas que o compõem venceram as 2 últimas eleições legislativas nos 2 últimos anos, saíram vitoriosas agora também nas últimas eleições autárquicas, com um nível de representação muito significativo, o que reforça a estabilidade política do país. Nós estamos, portanto, em condições de poder dizer aos investidores que vale a pena acreditar em Portugal e que Portugal tem razões para sustentar e desenvolver bons negócios, boas atividades empresariais que possam depois ter o retorno para os investidores. Nós temos tido a ocasião de atrair muitas empresas internacionais, estrangeiras, na área da inovação. Temos muitas áreas da economia cuja competitividade é hoje, de facto, diferenciadora para melhor no nosso país. Temos também uma capacidade empreendedora interna que acompanha muito o evoluir da nossa atratividade enquanto destino para os investimentos. E, portanto, é com isto, com este pano de fundo que, repito aquilo que disse há pouco, nós estamos no bom caminho, entendemos que estamos a dar passos importantes, mas queremos mais. Queremos mais. E dentro deste mais, eu deixo uma palavra final. O mercado de capitais tem um papel a desempenhar. Tem um papel a desempenhar no financiamento das nossas empresas, tem um papel a desempenhar como um destino também ele seguro das poupanças das nossas famílias, dos nossos cidadãos. Eu desejo que o nosso mercado de capitais possa aproveitar a embalagem que o país tem de transformação e de valorização da sua economia para também se poder valorizar e qualificar. E este encontro tem esse propósito. Eu desejo, portanto, que no final desta reflexão possa sair ainda mais capacidade de atrairmos investidores para o nosso mercado de capitais e possamos também dar um contributo para que a Europa possa ter a tal união das poupanças e dos investimentos e a tal união do mercado de capitais que faça com que não continue a desperdiçar muito do seu dinheiro para financiar os nossos concorrentes internacionais em termos de blocos comerciais. A Europa não pode continuar a assistir impávida e serena à canalização dos seus recursos financeiros para outros mercados de capitais, em particular o americano, porque isso é um duplo erro, se me permitem, com isto termino. É um duplo erro porque não só nós não aproveitamos o potencial de financiamento da nossa economia, como ainda o colocamos à disposição dos nossos concorrentes e, portanto, com isso, temos uma dupla perda de competitividade. Aquilo que desejo, portanto, é que encontrem também as melhores soluções e nos ajudem os governos dos Estados-membros e as instituições europeias a decidir bem, a decidir depressa, a poder concretizar tantos objetivos que estão há tantos anos nos papéis, nos relatórios, como Enrico Letta e Mário Draghi deixaram de forma lapidar nos seus relatórios, que nós possamos, efetivamente, ter agilidade suficiente para podermos robustecer os nossos instrumentos financeiros e, através deles, podermos ter melhor desempenho económico. Bom trabalho, portanto.
Thank you, Mr. Prime Minister, for your vision and for sharing such an insightful perspective on Portugal's economic future. Now we will continue with our next speaker and our host at this wonderful venue, who will share his remarks on the Portuguese investment outlook, offering a thoughtful view on the road ahead for the economy. Please join me in welcoming Paulo de Macedo, CEO of Caixa Geral de Depósitos.
Muito boa tarde, excelentíssimas senhoras e senhores, excelentíssimo senhor Secretário de Estado do Tesouro e das Finanças, excelentíssimo senhor Presidente da AIM, mais membros da direção, excelentíssima senhora Presidente da Euronext, senhor Presidente da CMVM, mais membros do seu Conselho de Administração, da Autoridade de Seguros Financeiros, excelentíssimos senhores Presidentes das Associações do Setor Financeiro, representantes das empresas cotadas, distintos convidados, minhas senhoras, meus senhores, good afternoon, dear guests. In my presentation, I will make a brief scenario and to typify in 5 or 6 points what are the geopolitics of where Portugal and we have constraints and that we also have opportunities. And then the Portuguese approach and our view. I have a problem here with my regime because the slides is not what is in the is there. So what are the main points that you all know, but that I would like to typify in terms of what is the global scenario? First, we have a concern with security and a concern with migration. Migration for Portugal and for other European countries is totally vital. For instance, the tourism in Italy and in Portugal would not function if there would not be tourism. The Portuguese GDP growth in the last years, first because of a little bit more of productivity, but mainly because the labor force employed the feminine population and then the immigrants. And that has been determined in terms of our GDP growth. Without immigrants, immediately our GDP would fall as it would happen to the other European countries. The other point is the security that the Prime Minister spoke, and in Portugal we have good news about that, and it is clearly a good place. But also, when we spoke about security, we also think about defense. And when we think about defense, we think of the other points that are around Europe, namely the political fragmentation, and what we see is the need for more public expense in rearmament, the need for public expense in terms of lots of corporations that are needed to be responded. What we see is in several countries that the public expense grows, and we don't see with a strong lack of competition. Not that the United States don't grow their own deficit, because the United States budget deficit is higher than in the past and is still growing in spite of all the measures that have been taken. So what I would like to point are these aspects that contribute to higher public expense, that the environment in interest rates, as you know, we all speak, the main part of the economists spoke, that the interest rates mainly would decrease 25 basis points until the end of the year. Now, the major part of the economists think that will not move, and if it will move next year, it will go up. So this is a difference in terms of the scenario. But as you know, even with all these decrease in interest rates, and even in the past where we have negative interest rates, what we have not seen is that the investment grew in Europe. And we have not seen also that the right correlation between the negative interest rates and the investment in Portugal. So there are other reasons, as we all know, to the investment grow. The other point, of course, is that that characterizes and also is aspect for Europe and, of course, for Portugal are tariffs. And about this, I will say something, but in the next slides. But my main points are, we are in Europe in an environment that we have a lot of pressure in terms of public expense. We have in Europe, as the relatório Draghi and Letta said, we have a lower productivity than the US. And so in Portugal, we must make a reflection how this translates to our reality. And we know that even to Europe, we need to increase our performance. There are other aspects that I think we can reflect also, but today I would like more to focus on this point and on the economy. And these points that I described gave rise to this chart that appeared a month and a half ago in the Financial Times, and with France that have clearly these problems in terms of an increase in their public expense and a fragmentation, a political fragmentation that cannot sustain its public expense also, and it increased the payment or the price of their debt. What this chart is important for Portugal is because it's not there. And so this is the way we link, and this is the way, this is the Club Med, and 5 years ago, 4 years ago, no one would think that Portugal would not be in the Club Med. And that is the main conclusion. The other conclusion is, of course, that France and the other countries cannot pay that price for their debt because it is increasing. They only can pay the price of the debt because this is the price of the new debt. So what balance more or less in their imbalance is the old debt that has a much lower cost. I just want to point it out, the Draghi report and on your left side, and the report that Draghi spoke about 1 year after the issuing 2 months ago, when he maintained that we still in Europe have a gap between the productivity to the US, that we still have a gap, a strong gap in terms of innovation, and of course we should take our conclusions to Portuguese companies and to the Portuguese environment to see how we are. And the question is, we think we must do a lot of things. The responsibles of European Union all have stated that they will simplify, all they have stated that they will have less bureaucracy, but what we see is that that haven't happened yet. And so, for instance, this is a kind of caricature, but when we think about EI, what EI discuss if who goes ahead is the US or who goes ahead is China, but no one has doubts who has the best regulation. And so this is a kind of thing that is a good reflection, I think, for this session and for what the government must do and what it is doing, and also for going forward. But the thing is, and the Draghi report is a comparison between Portugal and the US. But what we see now is that China, in terms of manufacturing and in terms of export, have for a long time #1. And that is one of the reasons, and if you look for Europe, Europe has less than the countries that are important European countries that are not here, but Europe accounts for less than 15%, 10% of manufacturing output. And that's why that is a major issue for Portugal and for other countries. And that's why, because of why tariffs go so up in the US. Tariffs are in the second most higher point in the history of the United States. So they had, in the 1929 crisis, it was very high, then it decreased completely after the Second World War, then now it increased because of this, because they have to import, and also because they have a budget, a deficit budget. And it's a strong deficit budget that they have, which is clearly a problem. And that is a concern because it changed the way the US operates in the world. And in 5 years, 25 years ago, US was the main partner, was the one that Europe must concern with, and now China is overcome and substitute US in that role. Going to Portugal, based on these points that are happening. The first thing is, I think we are here because we have reasons to be optimistic. I think entrepreneurs are optimistic. And clearly, I brought this chart from a McKinsey study when McKinsey says that with the certain levers, we can increase the growth of our GDP in the next 15 years for at least 2.5% higher than today. And the levers are in the industry, creating more companies in industry, but mainly giving weight to big companies, because in Portugal we have clearly a low percentage of companies that can compete internationally, that can pay better salaries, that can have a competitive approach, and that can easily be more internationalized, then in the new arenas of business and also by EI. In these points, what to do in terms in terms of our part, it's a bit, I think, what the Prime Minister addressed. We need to have a lower bureaucracy. We need to have more fluidity in the labor market. We need to have a more reasonable tax environment. And I think it is a positive measure that for 3 years in a row, we know what will be the future corporate tax rate. I think it's one example, but I think it's positive. I think also the programs that we have to do in terms of reskilling, they are on their way. It depends a part on the state, but it depends especially on corporations. And corporations, of course, they are always saying that talent is, and it is true, that talent is our main goal and the key for successful for a successful activity, but we need to reskill much more, and it's not only the blue collar, but also the management, the top management of the company that needs to come to the university from time to time and in this quest. Also, implement a clear best-in-class immigrant agency, and of course promote and scale startup ecosystem, and to promote our capital markets. As responsible for the largest bank in Portugal, for me, it's nice to say that Portuguese companies mainly finance themselves through the banking sector. But of course, we should have a strong capital market in Portugal that can give options to companies, and that can create an increase in our country through other sources of financing. And I think that is not questionable. It's a question how to do it. It's a question how to give confidence to the players. It's a question how to capture more foreign investment, and that's it. Also, we have these points that usually appear, but that clearly are true. The energy costs that are lower than in much other countries, the competitive and relatively cheap workforce, the high quality of our life, and of course a strong digital infrastructure that we join to a positive infrastructure in general that our countries have, mainly in roads and now with also in the digital side. And relating this to another advantage of our country that should have the no, that is here, and you know all around where are the choke points of all the international trade. And our main certainty is that the international trade will be higher and higher if the trend continues, because most of the production is in Asia, and a part of the production will come back to the US with all these negotiations, with these tariffs negotiations and so on. So when we are in this spot, we are not on all these choke points and all these conflict areas. And if you see the map, you see why Greenland is important, and you see why Canada is also important, of course, because there are alternative routes for exports and for the international trade. And so I think our localization, it's also important. In terms of what McKinsey said, that another part from our growth must come from the new arenas of profit pools. We see these several profit pools, and we see then profit pools like, of course, the e-commerce, like space, like cybersecurity, etc. And we see what are the main profit pools that Portugal have a competitive advantage and that can attract more capital and can be more successful. And that is the case, for instance, for batteries. That is the case, for instance, for electric vehicles, and also for the cloud and for cybersecurity and for software. And these can contribute. We cannot have success in all the 20 arenas, but we can clearly have some success and some competitive advantage on these specific arenas where we can have synergies. In terms of the economic environment, it was being described. This is from the presentation of the Minister of Finance of Friday. So the data is available, so it is quite new. Of course, it's a bit of publicity, but what matters is, in terms, what we see is clearly the growth in comparative terms is there. The growth is 2%. Then no one feels very happy with the growth of 2%. But when we have a 5-year growth higher than the European Union in a row, it is positive, because we have the opposite during 15 years. And so we must see what is the opportunity, what is the case where we are here today. And of course, the tax system reform that I spoke, and also the comparison between the GDP growth rate between our main partners in the European Union. So it's not a question to be very, very satisfied, but it's a question clearly to understand the trend, and investors know and need to know what are the trends and what are the opportunity. And clearly we have the stability and we have this growth. For 2026, with growth also in the industry, with PRR, the European program, and that combined with the other advantage will be positive for our country. In terms of what we see in consumption and what we see in investment, we see, for instance, the credit in households is higher, is in a peak, is higher. For instance, Caixa is financing more than 500 million a month for 5 months in a row. So for the last 6 months, we financed 3 billion euros of mortgage. And this without the debt, the indebtedness of individuals going higher than the average of the European Union. This was a thing that was difficult to achieve, that our companies and that our individuals have a lower debt than the average of the European Union. It was achieved, and we maintain it like this. Also, in terms of savings, Portugal is around with the savings rate of around 14%, which is positive. It has some lower than some Scandinavian countries, but 14% is a very acceptable savings rate. And of course, comparing more with the past, when 20 years ago or 25 years ago, we had a 4% savings rate. So the change is there, and it is a different life in terms of savings, and this also, as you know, is also important for investment. On the banking side, what we see in Portugal is a solid banking sector, with all the main banks being profitable. Caixa more than the others, of course, but we would expect that. But the main point is the financial system is solid. Financial system has capital, the financial system has liquidity, the financial system has ratings, all investment grades, all A's or double A's, and so all the financial system wants to be partner, all the financial system want to grant credit, because of course it's not too difficult to understand. With lower margins, of course, what the banking system is trying is to look for higher volumes, and so more business. Also, we have these constraints, but of the DCB, we also believe in DCB that less rules will be applied. Of course, the banks in Europe are I would say, with a good performance, but when we compare to the US has a much higher profitability than the European banks. It has for several years, and it maintains, and with the difference of regulation, and that is a point. When we compare the Portuguese financial system, of the Portuguese banking system, with the European, what we see is several banks and the Portuguese banking systems compare well with the average of the European Union. So I think we have the opportunities, I think we have the momentum, I think we have the will, I think it is important then the biggest companies of our country give a step ahead, who is quoted on the stock exchange that have a special responsibility and have a special governments also give a step ahead, and that we can attract. Portugal needs capital. Portugal has good opportunities for that application of capital, and that's why I say that we all need to be on the stage. And that's why this conference is important, and that's why your presence in these 2 days is also important, is to see how is Portugal, what is new, if we have something new to say, which our willingness, how we compare with 5 years ago or 10 years ago. And I think, I quote this Ayrton Senna, it's not possible to overtake 15 cars on a sunny day, but it's possible when it is raining. So take the best of our actual crisis. Thank you.
Thank you, Mr. Paulo de Macedo, for your thoughtful remarks. Now we turn to a very special moment of today's program, the presentation of the report Innovation and Infrastructures, Connecting Portugal with the Future, a study prepared by Católica Lisbon School of Business and Economics at the invitation of IAM and Euronext Lisbon. So please welcome to the stage Professor Felipe Santos, Dean of Católica Lisbon School of Economics and coordinator of the report.
So hello and good afternoon, everyone. It's a pleasure to be here. Thank you to Euronext and the Issuers Association for organizing the Capital Markets Day and also for challenging us at Católica Lisbon, at the Applied Research Center, to really try to understand what's happening with the Portuguese economy. How can we explain the solid performance that we just heard from the Prime Minister, from the President of Caixa? How can we explain the strong performance? And how should we look ahead? Are we being too optimistic with the estimates? Are we actually being too pessimistic? And so I'd like to acknowledge the work that my colleagues Ruth Xavier and Pedro Afonso Fernandes did with me over the last 10 months in this study. And I go right into it. And I'm going to share to you this analysis in two parts. One part is the story of the new Portugal. That's the Portugal that you just heard about. It's a country with a solid economic performance, a balanced country with good prospects. How do we connect the past to this present that we see now? And the other story is the story about the future. What can we expect in the current geopolitical situation? Given our assets, what can we expect for the future? And here we try to look beyond the surface. We try to look at the infrastructure of the country, at the resource base, the physical resources, the human resources, and on top of it, the innovation ecosystem that leverage those resources. And that's the story that we'll share. So I'll give you some data and I'll walk you through this story. And I'll show you some graphs. And in the graphs, Portugal is always the dashed blue line. And orange is the EU area for comparison. And as we saw, we had a stellar economic performance in the last 2-3 years, growing much above the European Union, including in 2023 above Spain, and then interacting with Spain in terms of who is growing more. In some quarters, the Iberian Peninsula was the engine of growth of Europe. If we look back 7 or 8 years, this is almost a reason to smile. And the expectation is that we will continue growing between 2 and 2.5% for the foreseeable future. Is this realistic? And how can we support this estimate? Or is this pessimistic? The interesting thing about this growth is that it happened with a counter-cyclical policy, as it should be from the government. The government is not spending a lot of money, is actually saving a lot of money. Okay? If we go from the times of the economic adjustment of Portugal in the early years of the last decade, where our debt was around 130%, unsustainable, to where we are now at close to 90%, the path is unbelievable. It's actually the best record, I believe, in the world, if not the top is the top 2 or 3, of debt reduction between 2016 and 2024. It had some blips, so we were here. Clearly, in 2017, something happened that we entered into a trajectory. This is the convulsion of COVID, where the state had to spend a lot of money, and then we had the burst of inflation that allowed to deflate the value of the debt so that we could lower it faster. But it's interesting to see that one effect cancels the other, and the trend is very clear. The trend is for a debt reduction of 5% over the GDP per year, which is mathematical. If you grow at around 2 to 3%, if you have inflation of around 2%, your GDP nominal will grow about 5%, and so the debt will be lower to GDP if you don't have a deficit. And we don't have a deficit, and we have had a surplus, and that is, there's only maybe 3 countries in Europe with a surplus, and none of the big ones. So the growth happened with counter-cyclical public policy, and that's important to note. Second, this is a more historical graph, but it's fundamental to understand what's happening with the Portuguese economy. In 2000, the Portuguese economy had a twin shock. It had the Asia and China entering the World Trade Organization and started to be open and export to Europe, affecting our economic model based on low labor costs for shoemaking, textiles, manufacturing, agriculture, and services, low-end services. And suddenly, we had also the euro, so we could not continue our nice policy of currency devaluation every year. So we needed to be tough and transform the economy. People spoke about a lost decade. Do you remember the lost decade of the Portuguese economy? The economy was falling, exports were falling, it was tough. But whenever you deal with the private economy, with business and entrepreneurs, there's never a lost decade. What is there's an invisible adjustment to tougher competitive realities. And that's what the Portuguese economy did, the private sector. The public sector did not do it immediately, but it did it and was forced to do it with the economic adjustment that happened in the early years of this decade. When that happened, our economy started to be in surplus. Not only a public surplus, but also a private sector surplus. So the current account is basically the account of the resident economy vis-à-vis the world economy. How much do we get from exports? How much do we get from income from activities compared to how much we need to spend in imports and we need to pay in debt to other people? And so the economy was chronically deficit, 10% of the GDP. It became chronically positive except for a blip during COVID. So an economy that rebalanced. So that's the other part of the story. That happened with a lowering of the population at risk of poverty and social exclusion. And this is some data that is not well known or understood. In reality, we are a country, as was mentioned, with social cohesion. If we look at the percentage of population at the risk of poverty or social exclusion, we have been in a downward trend, which is great, to below the European average and below other countries like Spain or Italy, which chronically have a similar social structure that we have. This is amazing. So we were able to grow the economy, save money in the government, and still keep the social cohesion because elements of the welfare state were not touched in the cuts, and because we have a very capillary social sector that has a lot of support for families and communities that are excluded, and because unemployment became lower and lower and lower, so more people were employed and poverty was reduced. So that's another part of this story. Now, this is the shift that happens in 2019 that explains the growth in the economy above the European Union average. And this seems difficult, but it's not. Basically, it's the population. We have a drag on our economy, which is the aging population. Every year, more people die than are born, and every year, more people leave the labor market than arrive in terms of nationals, which means that the economy had a drag throughout all of this period. The natural increase was negative. There was net migration of population, and so the population change was negative. We're losing about 0.5% of the population per year that was dragging down the economy in the labor market. Suddenly, in 2017-18, net migration turns positive. More people come to Portugal than leave. And suddenly that flow was so large that canceled reversed the demographic drag and started to allow for a change in the population that was positive, and there has been a 1% growth in population in the last few years. Mathematically, a 1% growth, especially if you include them in the labor market, means a 1% extra point in the growth of the economy. So that's part of the story. Now, is this sustainable? Can we sustain a level of immigration of this nature without destroying the social cohesion? And the answer is yes, better than almost every other country in the world, because most of our immigration is cultural proximate, the same language, the same religion. So 50% of the immigration, this is looking at, in 2013, all of the foreign-born residents, so residents that were not born in country, where they come from. And what we see is that more than a third comes from Brazil, 16% come from Portuguese-speaking Africa, so 50%, easy to integrate in the job market. And then we have about 25%, which is highly qualified European immigration. UK is big, France, the US is growing. From the Ukraine, there was waves immigration. Italy is big. And then we have 25%, which is the more difficult to integrate. So this is very important, because Spain has parts of this. No other European country has this, which means that if we are clever, we can manage the flow of immigration well without hurting social cohesion. We've been doing it over the last few years, and I hope we'll continue. And this leads to this picture, which, if you want to understand the growth of the European economies in the last 4 or 5 years, this is the picture to look at. So this is the base of employment, base 100 for every country in 2019. There was the blip of COVID, and then it started to grow. But this means that in 5 years, we added about 6 to 7% of people in our labor market. Spain added a bit more. All the other countries, much less. That's why Spain and Portugal are growing more than the other European countries. Now, this brings us to the potential for GDP growth. And I believe Paul Macedo mentioned something similar. An economy grows essentially for 3 main variables. One is knowledge incorporation. When the human capital, when new processes, new ideas get incorporated in the economy and they improve the way we do things. And that is doesn't change a lot, and it's about 1%. Okay? And then we have the change in the labor force. If you have more people or less people, that immediately changes the level of the economy. And then you have the investment intensity, the capital intensity. If we put more capital, of course, capital depreciates, so it's not adding capital more than the depreciation, and it's not white elephants, it's productive capital that is put to use and produces value. If you increase that intensity, the economy grows. So what happened was, the story was a story of a drag, like investment was declining during the adjustment period, we were losing population, and the knowledge part was staying whole. And that leads to negative growth for several years. And then we started to be able to recalibrate with less of a drag of the investment on population. But suddenly, in the last 4 years, with the story that I explained, the economy grew much more. And so the GDP potential of growth is now between 2 and 3%. Okay? So this is the actual growth and the potential. So sometimes we are above the potential, sometimes we are below the potential, depends also on the economic cycles. But the potential is there. Okay? And the potential is there because the economy was strong, had a labor pool, and incorporated that labor pool in the economy. So that's the picture of the evolution of the Portuguese economy over the last few years. Now, what could go wrong here? And of course, what could go wrong is Mr. Trump and trade barriers. However, if we look at that, the US market is 7% of the Portuguese exports, our fifth most important economy. Spain is the first and is 3 or 4 times bigger in importance and is growing. And so we deployed a model, in an equilibrium model of the global economy, looking at the rates announced by Trump, and the impact in Portugal is very low, at below 0.1%. Interestingly, some countries gain, UK, South Korea gain, even with trade barriers. Some countries lose. Germany loses a lot, France. That's why there was a rush to do an agreement with Trump not to avoid an escalation. So this is a scenario that would have localized pain, would not change the picture. The second could be the geopolitical uncertainty. Maybe the Russia conflict will deepen. Maybe the relations with China will cool because of something that happens in geopolitics. But in that scenario, I think some of the arguments that Paulo Macedo brought are very important. So in that scenario, we would likely benefit because it would be the safe strategic location for a more uncertain world. So the two downsides that could exist don't seem too dramatic. Now, I'd like to change the argument and say, what if there are reasons to be more optimistic than what I showed? What if there are reasons for the Portuguese economy to grow more than 2 to 2.5% over the coming years? And why? It's because it has built structural advantages that are very important, difficult to replicate, that will give us an edge. That edge can lead to an investment boom, and that investment boom will put the economy. We have the labor, we have the knowledge part, and the investment boom will put the economy growing above 3% per year. So that's what I would like to describe next. That's the picture of the future Portugal. A Portugal that has a competitive driver in renewable energy, telecommunications, natural resources, financing sources, human capital, and, above all, an innovation ecosystem that can leverage all of these resources. So, in energy, our position is, I would say, amazing. We have a trifecta of renewable sources. Historical strength on hydroelectric energy, which is very important because it provides a base load and it can also provide a storage capacity. We, lucky being a coastal country with lots of rivers flowing to the sea, there's an advantage. We were pioneers in wind energy that now represents another 20 to 25% of electricity generation. Again, an advantage of having a coastal area with different pressures between the seaside and the coastal side with lots of wind. And then we have solar. We are not the pioneers in solar. Germans started putting photovoltaic panels much before we did, but we were a quick catch-up. And recently, we have grown a lot in the last 4 or 5 years in solar energy, and now also generate about 20-25% in solar. And obviously, our solar is better than the German solar because the efficiency of the sun exposure is much higher. So we have unique energy advantages that makes our energy mix, so this is the total energy mix of the country, including consumption of natural gas, of oil, and we have 35% in renewable sources, which is unlike any other country of the big countries and the European average. Which means that we can have a lower cost of energy. And that is already starting to show. So before we didn't, but recently, if you look at industrial consumers, so high voltage consumers, we see that Portugal and Spain are now lower than in cost of energy in the last 2 years. And that is likely to continue. Also because of what we discussed here by the Prime Minister, if we don't create an interconnection with France to integrate with the European energy markets, and France resists because they want to sell their nuclear energy cheaper to the Germans, so they don't want to have the even cheaper Iberian energy crossing France. But because we don't have interconnections, our peninsula becomes an energy island with very cheap energy. Now, a little quiz. what is the driving resource for the digital age? Okay, chips, but what's the other one? Energy. Cheap, renewable, clean energy. Okay? And that's what we have. So that's one part of the picture. The other part is telecommunications. Okay? And here, also the situation of Portugal, due to investments done, is unbeatable. So we have in wireless, 5G, we have 100% coverage. We are not the early risers. We were 1 year late in 5G, but we caught up, and now we have full wireless coverage. But we do have an advantage on fiber optics, wired, broadband. We have always been strong on broadband, and now have 95% penetration of broadband across the country. Germany has 40%. The European average is 60, 70%. Huge advantage. The other advantage is we are the entry point of many undersea cables that all enter in Lisbon and Sines and allow us to connect Europe with the fiber optic, with the Atlantic and Africa. No other country, except for the UK, has this unique location as a hub for connectivity. So if you have cheap energy, if you have connectivity in the country and interconnectivity with the global economy, you have a huge advantage that Portugal has. But I'm not speaking only about the digital age and the new economy. The transformation of Portugal was fundamental in all the sectors: the primary sector, the manufacturing sector, and the service sector. When we look at the land resources, we have a unique advantage. One of the most efficient type of tree, eucalyptus, a type of eucalyptus that makes it the most efficient for paper and pulp production, a strong industry where we have world-leading companies like Navigator and Altri and others. We have the largest cork industry in the world, 50% of global share, the top 5 export of olive oil, a significant wine industry with a very high quality price ratio, as we all know. So we have significant advantages in natural resources, which have created a transformation in the farming productivity. Over the last 7, 8 years, you cannot imagine the revolution that has happened in the primary sector in Portugal. Part of that, a lot of that happening in the south of Portugal, driven by the Alqueva infrastructure that created the largest artificial lake in Europe and allows to irrigate plenty of lands that before were non-irrigated. So, cultura de sequeiro in Portuguese, culturas de irrigação. The productivity of irrigated land is a multiple, 2-3 times higher than non-irrigated land. A lot of land has been converted to irrigated land with a huge rise in productivity and a different type of crop with more economic value. And so that has happened in the primary sector. And the largest economic C-zone, exclusive economic zone in the world, a fast-growing aquaculture sector that doubled production in the last decade, the largest lithium reserves in Europe, speak about strategic autonomy at 60,000 metric tons, starting to be developed that can allow for strategic autonomy and reserves of other minerals that are important for the energy transition, like tungsten and tin and copper. Speaking about finance, I will be quick here because our previous speakers mentioned this. But one of the most capitalized banking systems in Europe, one of the best. So, growing savings of the population. Structurally, the Portuguese population had a low savings rate, and the country was in debt. Because of the transformation that I showed you, the lost decade that was not lost and the new decade where we were in balance, the savings have recovered. And now, in the last 2 years, we have the savings of the Portuguese families that align with the level of the European Union. And we have a private sector less in debt, with a lower debt, and the public sector with lower debt. So we have vast financial reserves, savings, that can be deployed to support a burst in investment if we have a strong banking system and a strong dynamic capital markets to deploy those savings, that capital, into productive investment. That's what financial markets do well. Just to give you an example, one of our leading companies, EDP, has raised more than 3 billion in capital markets, debt and equity, to finance the development of renewables in Portugal and across the world. I was just with Visabara, CEO, yesterday. We have built one of the best infrastructure development companies in terms of infrastructure for energy and for telecom. Is based in Portugal, in Viseu, of all places, and has 16,000 people around the world and sells 2B in infrastructure services. We have the capital and the capability to execute investments in these areas. Now, this picture allows to think big, to have scale. And an example of big and scale is the giant industrial and energy hub and logistics hub that is becoming Sines. Okay? One of the best and largest deep water ports in Europe, with great grid access because of the Galp thermal plant that was there, with plenty of space for renewable, with now one of the biggest data center projects in Europe, already stage 1 operating. We have recent announcements. So we did, of course, the study several months ago and finished by late summer, before all of these announcements. The 10B that Microsoft is investing in data centers in Sines, the 3B that Calb is installing a battery factory in Sines, the Sines expansion port, all of these, huge numbers. We didn't know about those, I'm not surprised. It may be those, it may be others, but the structural advantage of Portugal and Sines for those type of investments nowadays is unbeatable. So this is a story of infrastructure and resources. The other side is human capital, is the knowledge base of the country, of the population. There I have to say that the country has done an investment in the last 25 years, second to none in human capital. Of course, obviously, the base is small. So this is in 2000, base 100 every country. And of course, we had few people with higher education at the time. We had. But still, in 25 years, we multiplied by 3.5 the number of people with higher education in the labor force. That is a tremendous achievement. So we have now better qualified people than, for example, Italy, on average. So this is one part of the picture, and that, remember that little component of knowledge incorporation that has to do with human capital, that may be reinforced because of all the human capital that is created. Of course, there was a period that we were producing human capital, but our economy could not absorb it. So what happened? A massive exodus of young, talented people to the world. But now that the economy is able to absorb that talent, now we are in a better situation. And measures like IRS Jovem help in retaining our talent to put it to use in our economy. The trend is continuing. Again, base 100 in terms of students enrolled in tertiary education, and Portugal is leading in Europe, and there were a lot of students already enrolled. So what explains this? Our university system is now so good that it's attracting scientists and it's attracting students. I give you an example that's close to me at Católica, Lisbon. Okay? We now have 40% of our faculty that is international, recruited from the top universities in the world. We have 50% of our students that are international. Out of 3,000, 1,500 are international. So the university system in Portugal is strong on science, especially around business, engineering, sciences. It's attracting talent. And this is the perfect export industry. It's an export industry that's so competitive that the client comes to our country to benefit from that service and stays for a full year or 3 years or for a lifetime to be able to enjoy. Okay? So there is a lot of potential to continue the human capital development. So of course, you know this. Portugal is winning the global war for talent. We are attracting talent, young talent, expats. We are in the top 10 or top 5 of all the rankings and leaks. So the immigration coming is not low-skilled, many of which, as I showed, is highly skilled, highly talented. There's the war for talent, there is the war for wealth. And we are also winning the war for wealth, and there may be a lot of asset managers in the room. You can smile, okay? You can smile because we are in the top 10, top 7 most attractive country in the world for millionaires to relocate with their families. And an estimate is that we will get 1,400 new millionaires arriving this year. The year is almost over, so potentially 1,200 have already arrived, 200 are about to arrive. And we know and we hear every day stories. This is not just a number, it's happening. Okay? And if we're able to integrate these people with their skills, their networks, and their capital into the country, the impact can be huge. So the advantage that being a small country sometimes has advantages. When we are in the radar of talent and capital, a small inflow globally means a huge impact for a country like Portugal. Now, let me move to the third part of the presentation, which will be the final one. We have physical, infrastructural, natural resources. We have human capital that has improved a lot. What we need is an innovation ecosystem that can enable that physical, that human capital to create value. And my argument is that in the last 6, 7, 10 years, we've done huge strides on building an innovation ecosystem, which is a multipolar. Of course, there's Lisbon, but the story of Portugal does not start or end in Lisbon. Okay? We have next door to us, 5 minutes away, 70,000 innovative entrepreneurs at the Web Summit doing their thing. But it's not about that. Okay? The story of Lisbon is the story also of the unicorn factory with the 17 now unicorns being based and relocated to Portugal. Some are homegrown, some we are attracting. It's a very efficient factory of Auto Europa in the south of Lisbon on the other side that has guaranteed electric vehicles for the next generation. It's kind of a country developing. It's a metropolitan area that's very attractive. So nowadays there are cluster economies and people want to move to areas that have density. And we have 2 areas with density, Lisbon and Porto. Okay? And Lisbon is Cascais, Oeiras, Lisbon, it's the whole area. In Porto, a different character. Porto is the manufacturing heart of Portugal. So we have a transformation of manufacturing, as I described, in the last few decades. Our footwear is now the second most value added in terms of price in the global markets in the world after Italy. Our textile industry has been totally transformed and has high specialty niches and fast turnarounds, so it's not the low-cost industry that it was. And we have the invisible giant metallomechanics. Metallomechanics, just to give you an idea, is double, in terms of exports, the sum of footwear and textiles. Very advanced metallomechanics, selling 25 billion of exports every year. And that's why we are concerned when the European Union wants to put tariffs on steel and forgets that steel is minor and metallomechanics is huge in several European countries. Okay? So, and a vibrant ecosystem that is created around the main science schools and engineering schools of Lisbon and Portugal. But Portugal, interestingly, is more than Lisbon and Porto. And we have a multipolar innovation country with mid-sized hubs that show a lot of dynamism. Typically built around, initially, an engineering school that's quite good. Universidade do Minho in Braga, Aveiro, Coimbra, Évora, and each one having their own speciality where they develop deep expertise. Industrial, IT areas in Braga, telecom and materials in Aveiro, software robotics in Coimbra, aeronautics clusters in Évora. So this means that there are multiple paths for innovation in the country, not only Lisbon and Porto. Now, what are the opportunities for investment? What areas can grow further? Okay? In the report, we have identified 4 main areas of growth and development. Okay? Health, centers of competence of multinationals, digital cloud, and defense. Because those are the areas aligned with European priorities, which are likely to see a lot of investment. As I described, the competitive advantage of Portugal is much more broad-based and touches upon all of the sectors, but focusing on a few specific things. So health, pharma, and biotechnology, we have world-class companies and research centers and unicorn ventures. We have a whole ecosystem around some world-class research centers, like the new GIM, molecular biology, and a merger of the Gulbenkian Institute of Science and the Institute of Molecular Biology, the Champollion Center. We have a pharmaceutical industry that is starting to innovate and produce new medications, and now exports about 5 billion. We have private sector that's highly efficient in terms of health and also driving innovation. So this, of course, it's an area that will see a lot of growth in the future in Europe, also because of the aging of the population and the technological innovation. We are very well placed to be a global leader, a driver in some of these areas. Next comes the competence centers of multinationals. This is a very interesting development that we don't speak enough about this. When a company like BNP Paribas decides that it wants to locate its development center, its service center in Portugal, in 10 years hires 10,000 qualified people, becomes the biggest qualified recruiter in the country. Okay? And it's not, so traditionally we have Siemens and Bosch and many other. So this is something that can drive, because of the advantage that we discussed, human capital, low energy costs, nice place to live and to work. We can attract safe location. All the European multinationals are reconfiguring their value chain and trying to deal with the new geopolitical situation and thinking, where should I locate my industry, my developed centers? When people think about services and high-value services in a European multinational, I guarantee you, Portugal is in the top 3 of every list. Top 3 of every list. And what we need to do is to have a policy that converts the top 3 to number 1. Of course, if it's a homegrown unicorn, like Sword Health, TechEver, Fidzai, or many others, we are top 1. And they built their development center here, not top 3. So there can be a huge development in this area of attracting multinationals across different domains. Finally, digital and cloud industries. Here, when we wrote the report, this was not so obvious. Nowadays, the announcements are so big that I can't pass this. You understand the potential. You are seeing the potential. It doesn't matter if it's IBM or another company investing. We are probably one of the most competitive countries in the world for data center and digital development nowadays. And Sinch and the Lisbon area will be a powerhouse for these developments. And finally, industrial and defense capabilities. Of course, we can be suppliers to the main defense industries of the most important countries, Germany, France, Poland, Italy, Ukraine, because we have a metallomechanics industry with strong expertise that already exports 25 billion, sometimes in high precision mechanics. But in addition, we can be world leading in some areas, and that includes the area of aeronautics, drone technology, space, where we have some hubs of competence, but particular drones, we are well positioned as well. And so that's 4 areas among many possible ones. And so what I wanted to say is that there is a recent story of the Portuguese economy, and there is the understanding of what happened to Portugal's economy over the last 20 years and the transformation that happened in all of the areas. The last decade has been interesting in investment, human capital, science, and innovation. We started to see the results in the last 3 years, and now we are very well positioned in the current context, in the current geopolitical situation, to be a hub for attraction of investment and economic development. And my main point is that there's no silver bullet, there's no one arrow in the quiver. We are not dependent on one investment. The Portuguese economy nowadays is like a swarm of drones, all different, powered by renewable energy, well connected, able to kind of face the battle of global competitiveness. And if it's not in this, it will be that. And you mentioned that I was able to speak about half an hour about the Portuguese economy and its future development, and I did not mention the word tourism one time, okay? So because it's not one sector, it's not one, there are multiple angles in which the Portuguese economy can shine in the future. We believe that we'll see a cycle of strong investment to take advantage of these opportunities. We have companies with capability to implement some of these projects because of the investment we've done in the past and the transformation of the industry. And if we get that additional investment powering the Portuguese economy, it will grow above the 2.5% that's expected. And I think we'll continue to have good surprises coming from the Portuguese economy. And I hope we are all here and part of this work to invest and to help grow the economy and increase the welfare of the population. Thank you very much. It was a pleasure to be with you.
Thank you, Professor Felipe Santos, for the excellent presentation. Now we move on to a conversation that brings together the regulatory perspective. Please join me in welcoming Mr. Luís Lajinha de Souza, Chair of CMVM, Portuguese Securities Market Commission, and Mr. Abel Sequeira Ferreira, Executive Director of IAM, for a fireside chat.
Hello everyone, it's a pleasure to see you all here. We promise that at 5 p.m. we will end our conversation. We are joined today by someone who holds a uniquely demanding and consequential role, Luís Lajinha de Souza, the chairman of CMVM, the Portuguese Capital Markets Authority, responsible not only for overseeing financial markets, but also for ensuring their integrity, stability, and long-term reliability. And in today's rapidly evolving environment, we can only imagine that that mission is more complex and more essential than ever. Across Europe, capital markets are at a critical moment of significant change. The ambition of building a true capital markets union remains alive, but fragmented regimes, geopolitical shocks, and competing priorities have made that progress very difficult. At the same time, the rise of digital finance, the growing weight of private capital, and the excesses of regulation, namely around ESG, are reshaping how markets function and how they are supervised. Amid all this, we know that national regulators are being asked to do more, with faster response times, greater transparency, and sometimes limited resources, even if and when their own existence seems sometimes open for debate. Today we'll try to discuss not just what companies or investors expect from regulators, but how the regulator sees its own role in this landscape. We will explore how regulation is evolving, what is changing, not only in the rules, but also in the role of the regulator itself. So thank you very, very much, Luís Lajinha de Souza. We truly appreciate your presence today, and we are grateful to you for accepting our invitation to reflect on topics of such critical relevance. Let's begin. The first set of questions regards your balancing mandates. Indeed, CMVM is tasked with ensuring market integrity and investor protection, but at the same time, supporting market development. How do you see this balance between investor protection, regulatory oversight, and on the other hand, simplifying access for issuers and listings in a relatively small market within a heavily fragmented European landscape?
Well, first of all, thank you, Abel. It's a great pleasure to be here. I also thank Professor Ted Marks, Isabel Lucia, and I know it's quite difficult to put up such an organization like this, so a strong word of appreciation for the effort, because it is important to have this kind of events. I know we are tight on schedule, so and I think for the sake of your patience and hopefully also to keep your attention, I will try not to be too technical. I don't think that's the purpose of this conversation. But you mentioned there, you know, the need to balance the different roles. It's not an easy task, but because the role of the, and let me start by saying that we are usually called regulators, but we are essentially supervisors. It doesn't mean that we don't have a little bit of regulatory capacity, but we are essentially supervisors. I mean, the regulator is the parliament, and we have to comply with the regulations. We have to act as supervisors. But in our role, let us put it for simplicity of regulators, we have to balance all these things, like investor protection, like market integrity, financial stability, and within the specific case of CMVM, we also have the role of contributing to market development. It is important to say that, you know, this is a rather big spectrum, but things are not incompatible among themselves, but of course there are limits to what we can do in some areas, particularly in market development. I would say that one of the most fundamental contributions for market development is to have good supervision, because that provides also a solid base for those who act in the market. They know that it is important to have a well-supervised market. So that is totally compatible with market development. Another thing is, which is totally compatible, is that you have a good investor protection, because if investors don't feel that they are protected, they, be it institutional, be it retail investors, you know, it will be more difficult to attract investors for the market. So it's not something that you would be able to have a prosperous market, so to speak, if there was not the degree of protection. So this is pretty much compatible with market development. When there is a conflict is when you have to go to a large extent in terms of market development, and you have to also, to do certain things, you have to interact with those you supervise. And that becomes quite challenging, because particularly for a supervisor, there are limits to what we can and what we should do when it comes to market development, because we have to ensure that we preserve our capacity of also making good supervision. So there are limits there, but what I can assure, and I think CMVM is doing whatever it can to test the limit of where it can go in terms of market development. If I can illustrate that with an example, one of the initiatives we have, which is the Sandbox Market for Growth, is one of such clear example. It was extremely difficult to put in practice, because to manage these difficult balances, but in any way, with a tremendous effort and cost, we've been implementing it, and it has also been recognized at European level as something that is potential to be replicated. Of course, per se, it won't solve, but it's a contribution.
Talking about European level, despite some recent efforts that are still to show results, most companies still find public capital markets less accessible than bank financing and other ways of financing. The Capital Markets Union remains a central ambition of the European Commission, with a different name, but progress has been uneven, to say the least, and the market is still highly fragmented. In your view, what is being done, what reforms, if it's the case, to encourage more companies to access public capital markets And what might that mean for investors in terms of supply of investable opportunities?
Yeah. Well, as you mentioned, if we go back a few years ago, the word was capital market union. Now we have savings and investment union, which and as the Commission Albuquerque has explained, it's a kind of umbrella where you have, under this umbrella, you have the capital markets union, you have the banking union, you have the retail investment strategy, so it's all part of the package. And we see there a strong and genuine commitment on making sure that we have a broader use, a much bigger use of capital markets throughout Europe. And I would say that if this ambition translates into reality, I mean, the potential is there for us to see a much bigger role for market-based finance compared to bank-based finance in Europe. Having said that, I've already used this expression. I hope this is not then taken out of context, but there was this story from Hans Christian Andersen about, in English, I think it's the king's cloth. It's the name of the story. If it's not exactly that way, it's similar to that. And in our case, we've been sometimes trying to play the role of the kid who is there looking at the king passing on the street, and then he says, "Oh, but the king is naked." It's like, and what I mean by the king is naked, I mean that the economy, be it the Portuguese one, be it the European one, the economy is not an archipelago where the financial markets are disconnected from the what goes on other parts of the economy. And this means that although, of course, it is not irrelevant that we do everything that needs to be done to improve the efficiency, the way the financial markets operate, even if we were to achieve a full integration, zero fragmentation, and sometimes, there's a different understanding, but let us say if there was just one entity for each one of these roles, which would clearly be a big challenge also in terms of competition, because it is important to have competition. But even if we were to eliminate all this said fragmentation, I'm not going to say that it would be irrelevant for the outcome, but I would say that it will fall very short of what is needed if you don't address other things in other parts of the economy. And if we think about what has been said here in previous interventions, what is good that you have a working financial market then if companies are not allowed to sell their products or their services throughout Europe? We've heard the case of energy. I mean, the Iberian Peninsula is isolated almost. So if we take this to other areas, we really need to make sure that all the different sectors have the capacity to become attractive for investors, because we can make financial markets functional, efficient, but then we need to have the underlyings being traded there who are sufficiently attractive for the investment to flow, and the investment goes to where you have better returns.
And in that, can we have some kind of silver bullets? Can the adoption of savings and investments accounts to be a silver bullet for us?
I have never seen one other than in movies, so I don't think you will have a silver bullet here. Having said that, so you will clearly need a combination of things to make work. The good news is that that combination is possible. If you look at the European landscape, we talk about Europe, but Europe has different realities. And the truth is that all these different realities, let us put it, these different countries, they all face the same hurdles. They don't work under a different regulatory environment, a different fragmentation environment, and you have very big differences. And if we were to replicate the successful ingredients that you have in the most developed country If you were to replicate those ingredients throughout Europe, you would more than double the size of the European capital markets within the existing framework. It is important today. But coming to your question, there is no silver bullet, so there is a number of things that can and should be done. But that doesn't mean that there are certain things who have the capacity to have a stronger and quicker impact than others if they are properly done. And in that landscape, I think that the savings and investment, the saving investment account is clearly one example that if you do it right, you can have a meaningful impact both in the short run and eventually also a cumulative one for a longer period.
But at the same time, we have some kind of a paradox. You, as a supervisor, you know very well the position of AEM regarding the excess of regulation. And we have a kind of a paradox. So investors are increasingly prioritizing ESG, sustainable reporting, green finance. But companies, of course, are concerned, I would say fairly concerned, about the cost and complexity of regulatory compliance, especially around sustainability reporting, double materiality, value chain disclosures, which are, in the whole, too much complex. Are you optimistic regarding the Omnibus One package and the review of ESRS? Do you see real simplification coming in these areas? Or are we merely witnessing a different labeling, or even worse, a reshuffle of the same burdens?
I have to say that I haven't been able yet to find a crystal ball that allows me to see the future in the way I would like to see. But I think your question has allows to cover a number of different things. And one thing is, if climate change, biodiversity loss, sustainability, if it is a problem, is not by pretending that it is not a problem that it goes away. So we'll have to
deal with it.
We'll have to deal with it. If not sooner, it will be later, and usually when it's later than sooner, you have less options, and you have to...
Maybe not killing all the trees to make paper,
yeah,
as the European Union does.
Yeah, so I mean, that is clear. Another thing that it is important, if capital markets, they have to play a role in there. Both in terms of pricing the risk that already exists, both in terms of financing what needs to be done, and capital markets, they need a key element to operate. And I don't think that, even if I don't have the crystal ball, I don't see that changing in the future. And that key element is good information, because that's what allows those who act in the financial markets to understand the risks and to price the risks and to make their decisions on where they want to be invested. So that means that access to information is always going to be critical. Having said that, I think it's not difficult to agree that some things have gone too far. And thinking about what needs to be done, I remembered many years ago we had those Betamax and VHS videos, and we basically used the rack and play button, but we always, people always paid for equipments that had a lot of other functionalities that costed a lot of money more, would be extremely expensive, but it was not used. So what I'm trying to say is that we need to find what is the rack and play in this topic, because it is important that we have the right level of information. We need information, so it's going to be a need on that. But ideally, we should not be able to put an excessive burden on entities if there is information that is not needed. And I have to say, it is important that I see areas where there's a clear alignment of incentives, because be it for individuals, be it for organizations, I think it's important to have incentives aligned. And I see incentives aligned in terms of, for instance, the supervisors. My colleagues, when we meet at the ESMA, when we discuss in different forums, we are all concerned with this. I mean, we don't like to have to request more information, to process more information, because most of us, if not all of us, we live on very tight budget, and this represents a cost. And if we are not efficient on doing our job, you know, it's not good for the market. I think so. There is clearly a good perception and of alignment and incentives. I would like to say that the same exists with those who produce the regulation, but I think there. I hope that a positive evolution can be achieved. So I would be careful, optimistic, realistic kind of thing. So just to come to your question.
We are trying to help that. I have a number of other questions, but we unfortunately don't have the time for them. So I want to give you enough time for a last question, which I think may be the most important for our audience, which is looking ahead for the next 3 or 5 years. What are your top strategic priorities for CMVM, and of course, by extension, for the Portuguese market, that companies and investors should factor as or into their decision making? And also, if we still have time, where do you see the biggest opportunities in European capital markets?
Well, I don't want to play the role of analyst, because we're not supposed to do that.
I'm not asking for
advice. But I think the strategic plan that CMVM has put up for the 2025-2028 period is a good basis in terms of what we believe it's important. So that strategic plan is based on the vision that capital markets, they are crucial. They are an essential part for long, sustainable growth for any economy. I mean, we can be happy with what we have, but if we want to achieve our full potential, capital markets have to be part of that process. And if we don't use them to the level that they should be used, we will always be at a less than optimal solution. So that is our main assumption. And I have to say, this is a very important also basis of energy for those who work at CMVM, knowing that there is a purpose there, knowing that we are working on an area that is really important for the economy, for the citizens, for the companies, for the country. So this means that when we look at how Portugal is, we clearly see a strong imbalance on how the economy is financed, too much bank-based finance, comparatively small market-based finance. And I think it should be a shared goal to, it's not by reducing the level of activity of the banks, because ultimately, if we make a better use of the markets, it will also provide growth opportunities for the banks themselves. And I think that the chairman of CGD he stated that very clear. But we have to be capable of not just recognizing that this is there, but also making sure that this happens. And it's not impossible to happen. You know, there are a number of things that need to be addressed, and I would say the interesting, but sometimes also frustrating thing is that we can, by doing certain things, solve many problems at the same time. I just trying to be briefly. If to put it in a simple way, although oversimplifying is always complicated in topics like this, but we need, for having thriving capital markets, we need to have capital. long-term capital that is available to invest. And this is clearly needed in Portugal. It's recognized that we have a lack of capital. So we need to make sure that we can increase that stock of savings. Usually, if we talk with other European and in the US, that comes mostly from savings to retirement. So we need to address this issue, which is a very complicated political, ideological issue, but it has not only the potential of addressing the topic of lack of capital, which is important for the companies, which is important for people to have that money that generates revenue, and which is important to support their retirement, given what we all know that it will be the substitution rate when they retire for those who are entering now or have just started in the labor market. Then you need also a tax system that is adequate. But by tax, we should not just stick to the tax rates. It's what does this apply to? How easy it is to fulfill your tax
Declaration.
Statements. How stable is that? All that, and the savings and investment union again, the saving investment account, if properly can address that. The other thing, then you need also companies who are who have the drive to grow and who are capable of delivering returns because to make the capital flow. So this applies in Portugal. This is also true for Europe. And I hope that if this is properly recognized, and it's not rocket science what needs to be done to make this reality change. And I haven't seen that will to make this happen has, at least in the context of my professional life, in my recent professional life, as we see it now, I just hope that if not all the will materializes, a substantial part of it materializes.
Excellent, we are aligned. Well, that's all the time we have. A very sincere thank you, Luís Leginha, again, for being so open and for sharing both your perspective and vision with us around the role of capital markets in building a more competitive and resilient economy. Thank you all for your attention. I was expecting to see Mathilde there, but she's not there, so I believe it's time to move to a well-deserved coffee break, which will end at 5:20. Thank you very much.
Thank you. Welcome back, everyone. I hope you had a refreshing break. Now we will continue with our first roundtable discussion of the afternoon, titled Unlocking Opportunities, Innovation, Physical Infrastructures and Industrial Projects. Please join me in welcoming our outstanding speakers, António Coutinho, CEO of EDP Inovação, João Bento, CEO of CTT Correios de Portugal, and João Conceição, COO of REN, Redes Energéticas Nacionais, and the panel moderator, Isabel Ucha, CEO of Euronext Lisbon.
Well, good afternoon to all of you again. And in fact, our panel is about unlocking investment opportunities, combining innovation, talent, and foster industrial projects. And it is a great pleasure to have here with me João Bento, CEO of CTT, João Conceição, COO of REN, and António Coutinho, CEO of EDP Inovação. Thank you for finding the time to be with us this afternoon. I will start with a kind of open question, maybe for João Bento, and then following to the others. We have heard about competitive advantages that Portugal is building, especially over the last few years, in areas where maybe we were not so aware, maybe we didn't have the figures the numbers in our minds. So I would like to ask you in each of your businesses, which of these competitive advantages of Portugal you are finding more relevant?
Thank you, Isabel. I was commenting in the break that I was I kind of regret having accepted your kind invitation, because, well, all the very basic ideas I was able to grab have been exhausted by the excellent presentation by Philippe as a result of a very decent study. Congratulations, Philippe. Well, in our case, we are a logistics e-commerce player, so logistics is what matters. Well, I should say that we've been something that is probably a surprise to some of you. We've been the fastest growing e-commerce logistics player in Europe for the last 2 years. Of course, taking advantage of the magnificent tales of development of e-commerce. And so the factors that, in a way, are responsible for logistics. So the physical component of infrastructures, in our case, mostly for obvious reasons, the road infrastructure, that, well, for reasons of my professional profile, I also know very well, but we are indeed in an extremely positive situation vis-à-vis other investment destinations. Portugal, being a small country, is no less than has the fourth largest, in absolute terms, network of motorways. And if you divide in a per capita basis, we only lack slightly to Spain. So a very significant motorway infrastructure. Of course, we know that, well, more or less functioning airports, we would benefit from additional capacity in Lisbon for sure. Most of the parcels that we deliver every day, and, well, as we speak today, I believe the number was probably around 7,000 to 8,000 parcels today in Iberia, of which close to 300,000 parcels were delivered or are being delivered today. The huge part of this arrives from Spain. So in the airports arena, we need to improve. And then, of course, because we are very much connected to e-commerce, all the digital infrastructure and telco that is, already vastly illustrated. So I would say that these two components of physical infrastructure. we don't see a problem in hiring talent. So we are, in a way, beneficiaries of the route that Philippe has already described. But I would probably classify road infrastructure as the most relevant factor for our case.
João.
Well, thanks. First, I would like to thank you for the kind invitation. And I have the same problem as João Bento. I think what I was about to say, it has been already said, but I will sum up. Basically, in what is energy concern, I would highlight the three factors. Competitive energy pricing, which is coming up. The second one, sustainable renewable energy, which is something that many of the users are looking for. And the last one, self-sufficiency, because we are moving from dependence on thermal energy, coal, gas. We never had nuclear, but going into our own energy, hydro, wind, and solar, which is made in Portugal, let's say. We at REN, we are witnessing that on the long queues waiting for connection to the grids. In fact, we have on both sides, generation and consumption, we have a long queue. For you to have a perspective, currently we have an installed capacity of electricity generation about 22 or 23 gigawatt, and we have a queue of more than 20 gigawatt to come on new energy generation sites. That means doubling what is existing. On the consumption side, we have a peak load about 10 gigawatt. We have already granted new connections for another 10 gigawatt of consumption, but there is still a queue of 37 gigawatt from data centers, green steel, ammonia, batteries, whatever you want. I think there is a queue for that. So these are the 3 points I would highlight. And honestly, I think it's like it was very well shown on the study. We are starting to witness that coming as a reality in Portugal.
Thank you. Antonio, your view on the kind of top 3 competitive advantage from your business perspective?
Yeah, I would pick up the question of energy. We are always talking about AI as the next future. Data centers support AI, and we think about AI of coding, but there is no AI without electrons. AI actually runs on electrons more than the code itself. So no energy, no intelligence, if you think about it. So João just mentioned the question of the amount of demand that is asking to enter. Also the amount of generation that is poised to enter, but in the end, you need to connect the points between the grids, which João is working quite hard, and the team. But we also need to connect and ensure that demand occurs at the same time as generation. Without this, the competitiveness of energy is not there. And the question of renewables is very relevant because renewables are the fastest, they are the cleanest, of course, but they are the fastest and the cheapest new energy form in terms of electricity. Sometimes we mix the word energy with electricity, but talking about electricity, countries are competing on electricity. AI, currently, the limiting factor of AI is electricity availability. So without electricity, there won't be AI. And having electricity and competitive electricity, and that is also clean, positions AI and all the services that are going to leverage on AI very positively in Portugal. So we have the talent. It was interesting to mention the question of the number of graduates that we are having in Portugal, but I think it's very important to talk about the STEM graduates. Portugal has around 30%, OECD has about 25%, US has about 20%. China has 40%, but it's really relevant to understand about how the competition is being doing. So energy, talent, And one point that is very relevant for Portugal is the quality of life. And we should preserve the quality of life because it's attracting, it has a role on attracting talent. A talent is very sensitive to the question of quality of life. We have that, we have been blessed with that, so we need to preserve it.
No, absolutely. I think that one of the topics of the report of Católica for me is really the talent development. I think that some aspects of it are not so well known. And so my question also for the three of you and João Bento to start again is, are you finding the right talent for the challenges of today, but also do you think we are developing and attracting the talent for the challenges of the coming years for your investment projects and innovation projects?
Yeah, well, the answer is yes. We are finding that. I believe that the ability to attract and, in a way, to retain talent is a function of at least two factors. One is the attractiveness of the sector and the company that one is involved with, and the other one is, of course, the availability of the resource. And so it's more than obvious that Portugal doesn't have a deficit in terms of supply, and the fact that we are strong in STEM it can only mean very good news for the present and for the immediate future. In our case, we've become more and more attractive in the way that, well, CTT used to be a postal incumbent. Well, by the time I came to the company 6 years ago, mail represented 70% of our revenues and 145% of EBIT. And, well, last year we closed accounts with mail representing 8% of our EBIT, and we grew substantially. So we had a declining business, or a stable business, so to say, and then a fast-growing business, which is e-commerce, logistics, basically, well, the full value chain of delivering parcels. And in that sense, we became much more attractive as a company, also because, well, we are today, although with a significant physical presence and feet on the ground, we are extremely digital. Every product that we develop, it has a very strong IT content. And the sector became more attractive in itself. And just to illustrate that, we have an intake of 20 trainees program every year that stay with us for a year and then are fully incorporated in one preferred area. And well, in this year's round, we had 3,400 candidates, which is probably 5 times more than 5 years ago. So in a way, we feel that there is available talent, and we feel also that the situation in terms of retaining talent is I would say, reasonably mild. This is not the case for specific areas of expertise, as we know. And in that sense, we are also very strong beneficiaries of this trend that Philippe has illustrated. So to say that, I would say probably in every 10 people that we hire on IT, probably 8 or 9 came from Brazil or stay in Brazil working for us.
Yeah, we also have a significant number of Brazilians in our tech center in Porto. And I have also testified this interesting fact, which is we are able now to attract foreigners to come, and from Europe, not just from Brazil. And they come sometimes for 6 months, for 1 year, and then they decide to stay, which is interesting as well. So we are being able to attract very qualified people to come. And once they are here, they really realize the benefits and they realize the attractiveness and they stay. João, you testified the same effect?
The same. I think there is a kind of consensus around these issues. In what concerns to energy, I would say that we are living It's called the energy transition. I would more call it energy revolution, because we are changing everything at the same time. And for that, the human capital is going to be a driver of success. And I would differentiate in what concerns to REN two types of human capital, the white collar and the blue collar. Actually, we need both. Luckily, I think in what REN is concerned, Portugal has a long, good track record on engineering universities. So I think so far we have been able to attract Portuguese people, very qualified people, into our company, and those are the ones that are helping us to go forward with this change at different areas of the value chain internally within our company. Another issue is what is needed to make this as a reality. As Antonio mentioned, we will need to deploy a huge amount of assets for the next 10 years in order to make this reality and to make the necessary connections into the grid for new generation and new consumption. For you to have an idea, our investment plan for the next 10 years, we are roughly speaking about 4 billion euros in the next 10 years. And for you to have an even bigger dimension, the high voltage network that we operate in the electricity business is roughly composed of 9,000 kilometers of overhead lines. And in the next 3 years, we have to build 1,500 more. So for that, there is definitely a challenge of attracting human capital, and what we are witnessing is that us and our providers are trying to bring people from the different parts of the world, to start from the Portuguese-speaking countries in South America, Brazil, and in Africa, but also from other countries all over the world, Asia, South America, and other countries in Africa. And the challenge there is to retain this talent here, because what's happening in Portugal is happening in Spain, is happening in France, is happening in Germany. So many of these people coming into Europe, they are open. They are not in their own country, so they are open to the best offer. So what the effort to be done is to find the necessary conditions to retain these people here and avoid them to leave to other European countries.
Yeah. Antonio, you have a more innovation-related perspective, so you may be a bit more demanding on this side, right?
Yeah, on the innovation side, I think that there are several reports that are outlining that the lack of resources, the lack of talent is hurting the innovation development. And having a pool of talent, not only existing pool of talent, but bringing a pool of talent through immigration is very relevant. It's very important to note that the immigration that we are receiving has 39%, they have a degree, a tertiary degree. So they are actually more qualified than the population. And that's very different from the rest of Europe. So we are in a well positioned to receive qualified immigration that joins our immigration. Our pool of talent. And one of the things that I think it's very important, typically we don't mention that much, is that sometimes our talent is very focused on the technical side, very focused on delivering the best product, the best code, the best whatever. But then there is a lack of commercial and entrepreneurial savviness. By connecting the two, we may have human magic, and I think that is going to be very accretive from a talent perspective to generate economic value. If you see the level of R&D spending that Portugal has, it's not great. It's the country is on the 30th position in the world. But when you see the patents, we are probably on the sixth position in the world. And when you see the commercial value of those patents, we are even far away from. So we are not turning our R&D into patents, and then our patents are not commercially interesting. So we need to change this. And to change this, we need new people to have a different view, a different experience, and that will provide a lot of value for the future.
Yeah, but interesting that you mentioned that. We heard in the presentation of the study that we have good universities. We have these research labs, which many of them are developing products to go to the market in several industries. Do you understand that this is the way that we should continue? I mean, to build on this relationship, universities, lab centers, companies. What has to be done a bit differently? What is the perspective of these developments?
So let's talk on the universities. I think universities, our demographics are playing against the installed capacity of universities, if you think about it. So it's a fixed cost. We have a fixed capacity, and our demographics don't support this fixed capacity. So if you, from a business side, what can you do? Why not attract talent that has not yet a degree? Why not target talent that is 18 years old? The possibility of them staying here for 5 years, 10 years, or for their lives is even bigger. From a cultural standpoint, as Flip showed, this is really relevant because the level of integration plays a very important role on being accretive from an economic standpoint. So I think universities can do more just by exploring better the existing installed capacity. That's one part of this. The second part of this probably has to do with the way we finance universities, that we may have to rethink a little bit more on this to ensure that we start doing R&D connected with the business, connected with the economy, in a way that the value can be brought and can be more significant.
Is it your perspective
Yeah,
as
well, I spent my professional life in academia, and I remember very well those days. Well, an example I remember to mention several times. One day I was asked to be a referee for a promotion at MIT, and the candidate sent me a book, a huge book, with basically 3 blocks. One was scientific contribution, which is very important for, globally. The second one was a project, and the third one was fundraising. So this idea, and it was a shock for me, because this idea, this was maybe 30 years ago, that, a third of one's lifetime or career would be devoted to fundraising was in fact a bit strange. But fortunately, things changed dramatically in recent years. And it's today, I mean, I remember when I presided COTEC, to mention several times that, the fault for less of cooperation was in both sides, both at the university side, that was too much concentrated on their own internal issues and scientific problems, but the same responsibility should be awarded to companies, but they didn't turn to the cheapest and most valuable knowledge asset in any society, which are the universities. These days, I believe that this cultural gap has been strongly resolved, and I see, all the large companies I know, and certainly all that trade at Euronext Lisbon, have significant involvement with universities. So there is that availability from the university side, not only because they need funds, but they also understand that they generate more value. And so I believe that we came a long way. I suspect there will be, and there is a strong debate now, namely within academia, about this political movement of the present government of merging FCT, so the Science Agency with Innovation Agency. But I suspect that, well, in recent years, the Science Agency, FCT, agenda was very much devoted to promotion of this interaction with very, very practical terms. And the number of initiatives that were available and are for companies to get involved almost for free with universities and vice versa were huge. So I suspect that this merger that has been very, very much challenged and is raising a lot of debate will probably be beneficial of this idea that we don't need to lose the scientific rigor by being well, closer to real economy, problems of the real economy. So I'm positive on that sense.
Yeah.
And João, on your activity and your company, how do you feel this innovation challenge and the availability and the attractiveness of talent for innovation specifically?
Well, regarding this attraction of people from universities and the relationship between companies and university, I think Antonio and João have said everything. So I think this relationship changed dramatically, and the examples that were presented before show that. With this, before there were two completely separate worlds, and now more and more, both parts understood that they have much to gain if they are much closer. I mean, the collabs are a good example, centers of excellence are another examples, and they are being developed in partnership between companies and universities. In our case, innovation is absolutely essential. We have been tested last 28th of April with the extreme scenario of the need for innovation. We suffer a national blackout that was not caused in Portugal, but we were, as you know, all affected by it. And this is just the example of how important is security of supply, quality of service within the energy world, because if that fails, everything fails. And we are putting a huge effort internally to adopt our way of working in order to bring as much as new skills and as much as new practice into our system so that we can better respond to our requests.
So we are reaching the end of our panel. So one final short question to the three of you. You all belong to listed companies. We are in the Capital Markets Day. There is this new, I think, impetus of the Savings and Investment Union in, 1 minute. How do you see this, capital markets for yourselves going forward? Maybe João Bento.
Well, let me start. By coincidence, we had CTT's Capital Markets Day last week here in Lisbon. A huge success. We have this. We did this 3 years ago. We have announced our main strategic plans for the three midterm period, and we have announced financial targets, meaning revenues, operating margin, and also our overarching ambition of becoming Iberian leader on e-commerce logistics. And so myself, our IRO that is in the audience, Nuno, and our CFO, Nuno Vieira, and also Gui Pacheco, that is somewhere around, we are spending these forthcoming weeks visiting investors and potential investors. So we have strong beliefs on the role of capital markets. We are very optimistic. We would love to be in a more abundant, more populated exchange in Lisbon. I believe that is one of the goals that we should seek to bring. And so, I believe it was Luis, if you allow me to quote you during the break, was saying, well, because I was greeting him for an excellent conversation with the Bella, and he said, well, let's hope that at least we can bring another couple of companies, and that would be worth. So congratulations for this initiative. We are very happy with the situation, but I think that we need more.
I mean, very, very briefly, in our case, I think it's a good example of the importance of capital markets. We are a monopoly business, but we actually compete for capital with our counterparts in Europe. So the best in class is the one that can better attract capital. So in our case, we have recently been on a roadshow. My colleague, the CFO, has been in a roadshow in Madrid and with analysts. And of course, the issue of the blackout was at stake. And he explained what we did, how our approach, and all these analysts, they at the end concluded with these guys from REN are really good. So
that's good to
so
know.
that's the best we can receive, and hopefully that it reflects on the way the market sees us.
EDP has been a strong user of capital markets, both in capital and bonds, to finance the growth of the business. So I'm sure you will have a nice word to end this panel.
Last week we also had our Capitals Market Day. We presented our growth plans. We are in the right sector. We presented a growth prospects in the several markets where we are present, mainly in US, Europe, and also Asia. We are financing some of our growth with asset rotations that we are planning on doing. We had a stance a little bit that needs to take into account the levels of uncertainties that we are facing currently in the world, and position ourselves in a way to really take the opportunities of growth that are going to occur. We don't know exactly on each regions, but that's the good thing of being well placed globally to take the best opportunities when they arise.
So thank you so much. We ended our panel. Thank you, Antonio Coutinho, João Bento, João Conceição. It was a real pleasure to have you here. And we are now moving to our next panel.
Thank you. Thanks.
Thank you.
Thank you all for such a generous and engaging discussion. So we move on to our second roundtable with the theme, Is Portugal Doing Right About Deregulation? Please welcome our speakers, Paul Mialovic, Managing Director at JP Morgan, Paula Gomes Freire, Managing Partner at Vieira de Almeida, Nuno Martins, Partner Capital Markets and Accounting Advisory Service at PwC, and Américo Carola, Head of Millennium Investment Banking at Millennium BCP, and the panel moderator, Carlos Robalo Freire, CEO of AON.
Okay, good afternoon, everyone. So thank you once again for being here. And also, I will skip the presentation the presentations in the interest of time. But I wanted to express a huge thank you for your time, for being here, and also for agreeing to have this conversation about regulation. Okay, it's not only about deregulation. Just to make a quick connection between what was said on the other panels, just a quick take, which is, I think Portugal have good infrastructure, as we saw, also talented people, a strong drive to innovate, but to keep growing, and I think that's the connection between this panel. We need to be sure that we need the right regulation to compete in the markets. So I think that's the drive for the conversation. that we are going to have. Sorry, yeah, that we are going to have today. And let's begin our discussion. And I would like to start with Paula. And my first question is about also one of the things. There's some problems with the sound, but that's okay. Okay, it's related with something that we talked about also here, which is the European Commission, because we have also regulation from the European Commission. And my question is, so the European Commission said several times that they want to make rules less complicated, and in a practical way, what we are seeing coming up, not only for Portugal, can you just basically talk a little bit about if you see if the regulation it's becoming more clear, or if it's going to be more confusing because it's a new regulation, just to have your thoughts about this topic. Thank you.
Thank you, and good afternoon to you all. It's a great pleasure to be here, and congratulations on putting up this fantastic, important day for our country. It's a great honor to sponsor it on behalf of EDA. Let me just start with some, I think, compelling figures. And I need my notes for that because it's numbers, and I'm a lawyer. 700 billion euros is the amount of efficiency gains that can be unlocked by 2030 simply by refining the way certain regulations are applied. This is according to the Letta report. 13,013 is the number of acts passed by the EU during the 5 years preceding the publication of the Draghi report. This compares with just 3,500 pieces of legislation passed by the US at federal level. 63% is how much applicable regulations rose over the past 20 years in Denmark alone. And the EU administrative burden is estimated at 150 billion a year. That's 1.3% of Europe's GDP annually. So, I think that, how can this be? How can this be? And if you bear with me, I just also want to mention another few figures in respect of 2 examples of EU law. The European Sustainability Reporting Standards requires 1,052 data points, 783 mandatory, many materially dependent. Estimates point to 300,000 annual reporting costs per company. That's on the sustainability reporting. On GDPR, for example, designed to harmonize regimes in Europe, GDPR is probably the paramount example of fragmentation, very much due to all the member stating gold plating. In Germany alone, there are 16 different data protection authorities, and SMEs face up to 500,000 and large companies up to 10 million in costs relating to GDPR reporting. So these are just figures. Where does this leave us? And I think that if you want to know if the European Commission means any of these changes, I think there's no doubt for anyone that the intention or the intent is very genuine. And I think that the $1 million question for this room is whether the execution meets the intention. And let me explain what I mean by this. I think that the buzzword in Europe for the implementation of the reform recommendations from the Draghi report is simplification. It seems that after a decade of, head-spinning rulemaking, Europe is entering its simplification moment, and all in the name of competitiveness. But it's really not just, the issue is not really simplification. I think it's very clear that it is needed. I think the key thing, and I think that to your question about the risks or assessing the risks of things becoming more complicated, is really to make sure that what we're doing or what we're trying to do under this banner of simplification is something else, is actually unintended deregulation or deregulation by accident or, at the end, bad regulation. I think, semantics, this may seem like something is semantics, but it's not. Language is really important when it comes to these kind of issues. And it's not because, again, I'm a lawyer and we like words. I think what we call things does show the game. And I don't think we can ever confuse simplification and regulation. One is about, deregulation is about abandoning key policy objectives. Simplification is about how we achieve or don't achieve those. It's about the process. It's about friction in getting there. So it's about the how. Simplification is about how you get there. And deregulation is about whether. It's how we get to, simplification is really about how we get to agreed goals, while deregulation is about how, if we open the discussion as to whether we still want to discuss what those goals are, and if we want to make sure that we achieve them with binding discipline. One is about removing the friction and the costs and the confusion around it. The other is about standards, is about the ambition, is actually about preserving or not the so-called Brussels effect. So when we look at what's going on, for example, with the omnibus packages, which is the key tool for simplification in Europe, I think it's a mixed thing. There's a bit of both. And I think that in the name of what we're trying to do in terms of the simplification agenda, the agenda for competitiveness and the removal of burden, I think it's really important that we do not confuse these two concepts. And I think that with this level of, with 1.3% of GDP at stake, I think we cannot really afford to confuse the two. So, to start with and to start this discussion on this panel, I think that, simplification is what, this agenda is about. We need to be careful not to deregulate unintendedly and miss out on the key policy goals that we all together want to achieve.
Okay.
That's my kind of initial take on it.
Thank you, Paul, for the clarity and also for the impressive numbers that you brought. Nuno, so which sectors do you think? So we talked about a lot about several sectors, and we name it here. But which sectors do you think that we can benefit most from the fast deregulation? So we talked about energy, technology, capital markets as the most dominant ones, but we saw also the future ones. So in your opinion, what do you think about it?
Sure. So first of all, thank you very much for inviting PwC. It is an honor for me to be representing, and thank you very much for putting this event together. So that's great. And regarding your question, so I think the first point is really around the question of, and the word regulation and deregulation. So for me, it means exactly the same. If we do proper, sound, robust, rigorous regulation, if it's actually based, it's unbiased analysis, which is always very difficult to get to that point. And with the doses of co-regulation, actually we are in a world that probably don't distinguish regulation from deregulation. It's exactly the same thing. It's basically what we want to do, when to facilitate growth and economic growth and social growth. And I think that's the role of regulation or the regulation. So moving to your question, what are the sectors? At the beginning, we discussed that energy, technology, and capital markets will be the key sectors. So in the benefit of time, and because a lot of people have already talked about energy, and probably are much more experts than myself, I only have to say two things. So these three sectors, the regulation impact these three sectors in different ways. For example, energy, when we talk about energy, we talk about electricity and gas, and we talk about one regulator. So this is pretty much one thing. Mm-hmm. We saw in all the presentations that an issue, and I think it was an issue in the past, and probably could become an issue again, is the cost of energy. I think it has been solved, and probably it has been solved because of the economics, and of course, probably with the facilitated by the regulation. So on that point, on the energy, I probably will pass it on the benefit of time and on the benefit of the expertise of all the people that have already been in this panel. So moving to technology, to be honest, I don't think that Portugal alone could have a significant impact in specific regulation of technology. And if I can bring some numbers also, and they come from the Draghi report, I'm not sure, but if you are aware that there are 100 laws in Europe related to digital, and there are 270 regulators of technology. Of course, technology encompasses software houses, telecommunications, AI, So a lot of different things. But there are 270 regulators. So I think the issue around this is one, for sure. It's the fragmentation of Europe regarding the market and the market for technology. Second, there is, and everybody says there is a high cost on compliance on technology. And most of the players, they say that regulatory ex ante is bringing a cost to them. So it's not these sandboxes for regulation, which are start to be quite common, but this is something that is dragging the ability of Europe to develop their technology. The other point, and coming to your point, I think deregulation or regulation on technology is a very sensitive theme, because now we are talking about data protection, customer protection. We are talking about externalities. So on technology, we are talking about monopolies. So in technology, this is really key to have savior technology. So just a brief glance on that one. Finally, regarding capital markets, the one that are close to my heart, I have to say that we can discuss Portugal, but of course most of the discussions are coming from Europe and the fact that we want this union of the capital market. So of course everybody talks about fragmentation, but it's not the only issue. There is a cultural issue for sure. So when we look from Europe and compare to the US, we see that Europe is much more bank-centric. If we move to Portugal, we exponent this issue. When we look to the level of capital aversion or the appetite for risk, we'll see that the US will have much more appetite for risk than Europe. When we look to venture capitalists and actors on that field, we'll see that the US have much more venture capitalists than in Europe. And of course, when we see our unicorns and our talented companies, if they want to scale up, most of them will end up in the US or in the UK. First in the US, probably second choice in the UK. So there are issues to be solved. There are issues to be solved at the European Union level. There are cultural issues to be solved. And for Portugal, I think we need to bring back an ecosystem of capital markets. If it is for funds, if it is for corporates, if it is for startups, I think we need to bring something, a new ecosystem. Because nowadays, of course, we are in Europe, we talk about fragmentation, but at the same time, we say that we need to increase or benefit our ecosystem. But I think this is true. We need to have more knowledge in the country. We need to be more open to that discussion. So saying that, to be honest, I think capital markets probably second technology, and energy could be more easily, but I think we are close to that.
Okay, thank you for your perspective. To Americo, so I wanted to have your perspective also on, so we saw some research from IMF about global financial stability, and they had a very interesting figure, which is 50% of the global financial assets in the world, so now belong to non-banking entities, so which is, as we know, less regulated. And my question is, what will be the best approach for this situation? It's to increase for these entities the regulation, or the opposite, which is reducing it for banks?
Okay, thank you, Carlos, and I want also to thank for the invitation to be part of this event. It's such a pleasure to be here and such distinguished with such a distinguished colleagues. And your question, it addresses a very pertinent and very top of mind issue, because so much that European Central Bank President Christine Lagarde recently considered vital that policymakers adapt regulation and supervision to a difficult environment, as she called it, and argued that they should not do so by lowering standards for banks, but rather by raising them for non-banks. So we start to answer your question. She added that investment funds that have expanded into the lending business need to be tightly regulated. Well, the fact is that there is a considerable degree of interconnection between the two systems, the banking system and the non-banking system. non-banking financial institutions are linked to banks in various forms, being by credit or through derivatives. There are liquidity channels between them. So this means that stress in one sector could spill over to the other sector. And as non-bank financial institution now holds, as you said, around 50% of global financial assets, due to their size, this could, any failure could have systemic consequences. So increasing regulation for non-banking financial institutions would be a strong systemic risk mitigation measure. That's probably why Mrs. Lagarde also said that it is imperative to extend oversight to non-banks involved in bank-like activities or with significant links to the banking sector, and policymakers must do so sooner rather than later. And the background is that there are a number of risks that have been building up in the system, risks that have not been addressed in terms of regulation, and are now carried by a variety of funds, hedge funds, credit funds, rather than by the traditional banking system, mainly due to the fact that it was banks rather than investment funds that have been increasingly monitored and scrutinized within the wave of regulation that followed the 2008 crisis. So with banks heavily regulated, while non-bank financial institutions are not, well, riskier activities are likely to migrate or to have migrated to, or to develop in the less regulated sector. It is natural increasing vulnerabilities. And this is that is probably why the ECB president stressed that if risks increase in sectors beyond the reach of regulators and supervisors, a situation similar to that before the 2008 crisis could be repeated. That's not the same as it will be repeated, but could be repeated. So increasing regulation to non-bank financial institutions would prevent this and would also address concerns about unequal conditions between the two systems, the non-bank system and the banking system, and concerns about the inexistence of a level playing field between the two sectors. And also increasing regulation would also, and for non-banks, would also, and very importantly, boost investor protection and financial stability, as regulation, as we know, ensures transparency, risk management, and as such contributing to the stability of the system. Well, one can also add some reasons not to reduce regulation for banks, given where we come from in terms of the banking system and where we are now. Well, for one, historical reasons. We don't want the situation that happened in 2008. And also, given the activities carried by banks, lowering standards could clearly undermine public trust. Well, we are now in a situation where we have Basel III and Basel IV frameworks. So these are prudential rules that were designed specifically to prevent future crises, and relaxing them would be a step backward. This is not the same as to say that the rules that apply now and the frameworks that apply now for banks are unmovable. It is fair to say, and it's something that it's in line with what Paula said. It's fair to say that Mrs. Lagarde also considered that after a decade of adding legislation, it is time to assess how regulation can be simplified to avoid duplication and unnecessary burdens on financial institutions. That is something that's certainly welcome. So the ECB has now a working group on simplification, preparing proposals for the European Commission to consider.
And the purpose is clearly stated. It's not to relax the rules, nor to undo what has been achieved, but to reduce unnecessary complexity in certain aspects of the supervisory activities. So I think it seems to be clear that increasing non-banking financial regulation is the safest way forward.
Yeah, but yeah. As you said, so the level playing field, it's the most important thing
exactly.
that we need to operate in the market
exactly.
in a balanced way. So thank you for the perspective also. And Paul, so I wanted to ask you also about how do you see the Portugal, if the current regulations that we have in place, is this making too hard for companies to invest in Portugal and compare with other European markets? Just to have your perspective. Thank you.
Sure, and thank you for having me as well. I'm very glad to be here for the second year. Maybe I'll adopt, I keep it brief, but a global perspective. So Portugal is obviously a very healthy economy, one of the strongest in Europe. The index performance of the PSI, as some of you know, is plus 28% year to date, which is almost twice the performance of Europe and the US market. So clearly a very attractive and market for a number of investors. However, the amount of capital markets activity, so the volume of capital markets transactions that have been done in Portugal over the past 10 years is around 1% of the total European being EMEA, as we call it, volume. So there is clearly a deficit of investment and activity compared to the attractiveness of the country, the economy, as shown by the performance of the market. The second point is that we are in a global environment, and all the regulators, when it comes to capital markets activity, are generally trying globally to facilitate investments and flows of capital. So probably capital markets are the area where regulation seems to be the most possible pro-economy and less possible establishing barriers between countries and between continents. If you look back, the Asian markets have become much more investable and easier to navigate when it comes to raising capital or carrying out initial public offerings. Same for the US. And in Europe, we have made good progress. So maybe I'll adopt a bit of a provocative view or different view from some of the common understanding. But the regulations in Europe and in Portugal to raise capital are easier than they were a couple of years ago. And this is the direction of travel, easier and easier. And I think Europe, and Portugal in particular, has a significant card to play to attract more capital. I'll give you an example. You can now, it's going to be, there hasn't been so many examples, but it is now possible to raise capital for a company that is listed on the basis of a very short prospectus. So the days of a long prospectus are gone when you're already listed. There is already some disclosure. This is a facilitator. So I think Portugal is a very attractive investment destination and is obviously subject to European regulation and follows European regulation. So that's the strength of being part of the European Union compared to London, which has, yes, is an attractive destination, as was mentioned by Nuno, but it keeps changing the rules of the games. When you want to list in London, you know, the rules, the governance change. The last point is that, and then I'll stop, is that there has to be a supportive ecosystem if you want to attract capital. It's not only about, obviously, regulation, and regulation is only, as part of the European Union, a lot is decided in Brussels, but it's the ecosystem. When you see what Poland, Greece, the UK, to some extent, have achieved in terms of being one country united to attract more capital and to creating a welcoming ecosystem, it's very important. So what does that mean? And it's maybe sounding obvious, but a good education system, which you have in Portugal, with highly skilled people. Therefore, highly successful companies in Portugal and around the conference. There are very successful companies in quantum computing, in defense, in high technology. Having investors who are locally based and understand the environment and the country dynamics, which we have. Having government that is supportive. Obviously, we had the luck of having the Prime Minister and supportive this environment. A legal system that is also pulling in one direction and helping also and lobbying the regulators and the banks to make things easier. We had the chairman of the CMVM earlier who had a very eloquent pitch about the desire to simplify things and make Portugal an attractive investment destination. And finally, banks and legal counsel. So it's really one team. That is my message. And some of the countries where this team is not playing as one group are the countries which are attracting less capital. So I think there is a huge opportunity in Portugal. And hopefully an event like today is there to put the country even more on the map than it is already today, because there is a deficit of investment compared to the size and the healthiness of the economy. I'm sure it can attract much more capital.
Okay, thank you. So we are almost at the end of our time, but I think we have two more minutes to answer one quick question for you, and please be short on the answers, please. And I can begin with you, Paul. So could Portugal become a model for Europe in smart deregulation? So I'm thinking about, is there any reform that we should do, a priority reform or something that comes to your mind?
I'd like my colleagues and friends to answer as well, but I think it's private investing. I think investing by private capital into economies is the one thing that I think is much needed across Europe and in particular in this country, because that's the way to encourage future giants and help the economy grow.
Okay, thank you. Paula?
Well, I think that after what we heard today, I think Portugal can be the model for almost anything. So really happy to leave this room with this optimistic view. I don't think we have time to discuss any meaningful, anything in detail. I think that, really big picture, I think that predictability and we heard the Prime Minister today talking about how tax laws need to be predictable, how tax laws cannot be a budgetary instrument. So I think that if we can leverage on that, that will be a great, great improvement for the country, will be really important. And of course, labor laws. And I think that, now that we're trying to touch them slightly, there's a general strike on the looming in the horizon. So, but those are probably and obviously always the structural issues, but we don't have time to delve into detail.
Okay. No, that's actually a good point. No, thank you.
Again, as being the last one, I will pick some words of somebody. Sorry for that. But again, I don't see any silver bullet. There only appears in movies, and most of them in horror movies, to be honest. But again, when you think about it, and all the regulators that we have in Portugal, I'm not sure if we need to do any institutional design review and see all those regulators if they are acting together, if they are not acting together. So I think that's the initial point, because I'm not sure if you get to the point that we need something around that one. I think the second one is actually when we do some regulatory change, when we introduce new regulation, actually we need some impact assessment, or at least ex ante, and after that, at some point in time, some analysis, what it means, what it happens, what actually was the result. And I'm not sure if we are there or not. Probably we are at some points, other ones no. And at the end, it's just probably we need to improve our capacity of our regulators. So I think on that, if we can do all the three, it's too much, I know. Probably will be at least my initial view.
Sure, interesting perspective also. And America,
so in a very telegraphic way, I think, it would be very helpful if in all the interactions between citizens, companies, private economic agents, and the administration at the various levels, the administration could improve in combining digitalization with end-to-end processes. It's important to, in the backstage, to correspond to what is being offered in the front desk. Simplicity with understandability, So process has to be simple and has to be clearly understood by the non-public agent, and predictability with execution speed. I think that would be...
Okay, thank you. Again, so a huge thank for your time and for being here to this panel. Thank you.
Thank you very much.
Thank you to our moderator and panelists for this dynamic discussion. And now, as we approach the final segment of our conference, it's my pleasure to invite once again Miguel Ataíde Marques, Chairman of IAM, for his address, Portugal Attracting Talent as a Catalyst for Innovation and Growth.
Thank you very much. Again, hello. Thank you for the people that were here on stage, either in panels or presenting. In the audience, we had the Secretary of State for the Treasury and Finance, Dr. João Silva Lopes. It was not mentioned in the beginning, but he was here. And I would like now to finish my presentation, finish this, to end this conference by telling you a story. Why did I choose this title for this final presentation? I was about 3 weeks ago in Pittsburgh on a meeting of the US Competitive Council and the GFCC, which is the Global Federation of Competitive Councils. And everyone was discussing, lots of people, 200 people discussing competitiveness, and from all parts of the world, many Americans. It was hosted by Carnegie Mellon University and UPitt. And the story is that, to my amazement, many people I spoke to knew about Portugal. They were educated people, yes, but they knew about Portugal. They knew things that are special about Portugal. Many of them had visited us. Some of them have relatives or family residing in Portugal. So suddenly, Portugal is known. It was not 10 years ago in America. And also, Portugal is aspirational. So I was amazed by this concentration of knowledge about our country. And I decided to talk about it. The driver was talent. Portugal was aspirational because these people I was talking to, some of them were hoping to retire here, and many of them are very affluent people. It has to do about talent. It has to do about the capacity Portugal has today of attracting high-quality people, high-quality talent. So my presentation tries to pinpoint the evidence, to find out the reasons, and then to direct attention to challenges, because it's very easy to spoil this moment. If we do wrongly, we'll spoil it. So we can move from here and grow and progress and deepen our competitiveness in this field. Obviously, this topic is aligned with the presentation made by Philippe a little while ago of the Católica study, and also the themes that were present in many of the discussions this afternoon. If we start finding the evidence, I can say that Portugal is attracting a growing and unprecedented number of highly qualified foreign residents, that we know, and that most come to work in Portugal or to work from Portugal. Either they are employed here or they are employed somewhere in the world, but living here, working remotely. One point here, Portugal is at the crossroads of 2 continents, at least, and our connections to the world are mentioned by everyone as extremely important for people to locate here. So connections, airport connections. The only way to arrive to this country is by air, not by car, too far away, not by ship, only for cruises. The only is air. So this comes to the challenges later. This is also something that we know because one thing that was mentioned before is the strong inflow of residents from abroad. The statistics are staggering. The report that was published last month from IMA tells us that in 2017 there were 422,000 people residing in Portugal from outside Portugal, meaning people that were legal residents. 7 years on, last year, 2044, we ended up the year with 1.55 million people. So from abroad, residents. So we grew by 265% in 7 years. Many of these people, a small part though, but many of these people are highly skilled. If we look at the statistics regarding 2024, we can say that 9% of this 500,000 that arrived last year, only last year, almost 9% are highly qualified or starting a business, self-employed, which is not little. And this is something which is a fact that we have to celebrate. The international media have caught this. The international media has been very attentive to this phenomenon. Sometimes we in Portugal don't know these things. We are somehow polluted by these political discussions which are completely off the point. And the international media has brought this to the attention. Just a small cross-section. Lisbon, a fast-growing startup scene. The Wired, the influential Wired magazine has picked up the 10 most important startup hubs in Europe, and Lisbon is one of them. Then we have Porto, then we have Braga, then we have the European Capital of Innovation awarded by the European Union to Lisbon. We have the startup hubs by the Financial Times. And in the Financial Times startup hubs, we have 6 hubs, startup hubs in Portugal across the country. And part of this is the innovation and the technology centers. Where are these people working? What are they coming to do in Portugal? And I've made just a selection of a few interesting cases. I don't have time to go through them, but Euronext Securities Porto was mentioned by Isabel Ucha. Bosch was, and Siemens were mentioned by Felipe. I'll talk about the Champalimo Foundation, a Portuguese institution which is actually in the forefront of research in certain areas of medicine, in neurosciences, in cancer treatment. The Champalimo Center for the Unknown employs 450 researchers, 450 scientists, and they come from 45 different countries. And that is something which is happening before our eyes. Another aspect I would like to pinpoint is the unicorns born in Portugal. This list brings us the number of unicorns that are companies which reach the valuation, the formal valuation of 1 million euros before IPO. I know there are other counts on unicorns. We heard yesterday that Lisbon has attracted 17 unicorns. There are different ways of counting them. This is formal valuation before reaching IPO stage. And you know the names. They are 8 so far. It's an achievement, because if we look at other countries, the scoreboard of other countries, 3, 4, 5 countries of our size, this is very uncommon, very uncommon. Now, what are the reasons? This is the evidence. What would the reasons be? First, an embracing, hosting, and an incentive system. This is important, an embracing, hosting, and an incentive system. We have an ecosystem which attracts people to start up their businesses. The 17 number includes companies that have started working here in Portugal very recently. And they are hopefuls for be unicorns the way they go, but they were not generated from here. They were imported here. Those 8 I gave you were generated from Portugal, out of Portugal. And embracing hosting, this is great. The Unicorn Factory, the Beato Innovation District, Startup Braga, Porto, Aveiro, Évora, they are also examples of hubs which nurture innovation and nurture, starting a corporate activity. Then the university, it was mentioned, but I would like to bring this data, this information. The international students in higher education in Portugal are now more than 75,000, considering only degrees, undergraduates, masters and doctorates. And these 75,000 students we have today every year and growing studying in Portugal represents 17% of our total university population. When we look at the master's students, now the percentage goes up to 25%. 1 in every 4 students studying in Portugal for a master degree, full-time master degree, comes from outside Portugal. And we're in Portugal. If we look at the Lisbon metropolitan area and the Porto metropolitan area, the percentages are 38% and 32%. 38% of the total student population comes from outside Portugal in Lisbon. 32% of the total foreign student population in Porto comes from abroad. This is the reality. And business schools also play an important part. We are all linked to somehow business. So Católica Lisbon and Católica Lisbon School of Business and Economics and Nova School of Business and Economics, known as SBE, rank very high in the FT rankings. And in these 2 schools, more than 70% of the students at master's degree are non-Portuguese. And interestingly enough, the largest contingent comes from Germany. Then we have another 2 schools in the greater Lisbon, which are in the ranks. And we are the only city in Europe which lists 4 schools, 4 business schools in 100 lists of business schools, of the most recognized business schools in Europe. What are the reasons? Well, the quality, the rankings, of course, the quality of what we teach, the quality of the university environment, the employability. Those German students that come to Católica and elsewhere, they are, most of them, employed back in Germany. The German employers know Universidade Católica, know the other universities, know Nova, know ISCTE, know ISEG. They know these names, and they employ people from these origins. And the same happens with graduates in other cities. So employability is part of it. And then, not only the cost of living, the fun of living, and the safety, which was an aspect that our Prime Minister referred today, and we have to take care of this very carefully. Safety is absolutely essential. Safety is paramount for Brazilian affluent people who live in this country. Safety is seen as a paradise from the Americans I spoke to a few weeks ago. Safety is key. Attractiveness of Portugal to professionals with a university degree, the Footloose Index. They come to Portugal to work. They are university graduates. They are employed by companies here, or they work from here, elsewhere in the world. This report was published by The Economist back in April, and it's revealing. It's a study made by Gallup, encompassing 150,000 people, and the question was very simple. By the way, this is only ministered, this questionnaire, for people with a university degree, only with people with a university degree. And the question was simple. Would you like to move permanently to another country? If so, to which country? What was the result? What would you say? If you ask someone in the world, would you like to work permanently outside your country? And if the answer is yes, where would people say they would like to work? Probably the United States, North America. This comes to mind. But where does Portugal fare in this top of mind selection? Here are the results. Look at this. I don't have a microphone here, but I will project my voice. Look at here. This is a study that is made every 2 years by The Economist. In 2013, Portugal did not appear in this list of 35 top countries, top of mind for work. We started growing and growing fast, and then in 2024, the study is this year, we are number 12. And we are number 12. A country of our size, 11 million. We were 9.5 or 10, we are 11 million now. Appears in the 12th position. And above other countries that you can look in the list. This is surprising to us. To us Portuguese, this is surprising, isn't it? But many people know this. Many people study these reports, and they make their choices. Now, government policies and to attract and retain talent are important. Of course they are important. Residence visas for entrepreneurs, financial incentives to startups engaged in R&D, temporary residence permits, bringing into the country talent for scale-ups, very important for startups that are becoming scale-ups. Golden visas for creation of local jobs now do not apply to real estate, but they do apply still to investment in science or technology or the support to the arts, which is interesting. Some people can come here and get a golden visa, giving a substantial amount for a university, for a research center, or for the arts. The non-habitual resident regime, which was considered to be an extremely attractive regime, was unfortunately revoked. It was revoked. So we are not increasing this embracement, we are decreasing. It was revoked three years ago. Now, the infrastructure, I'll pass on more quickly here because it has been amply discussed. But when we talk to the digital infrastructure, we think about mobile data networks, and the mobile data networks in Portugal are considered internationally as robust and high performance as then they can be. It's not only the 5G, it's because they are robust and they are high performance. That's the only reason why we have 70,000 people today at Web Summit, all heavily users of mobile data, and the system does not crash. No one complains. It sounds trivial, but believe me, it's not. Then in Portugal, 95% of homes are linked by FTTH, meaning fiber to the home. So 95% of the homes in Portugal are now linked by optic fiber, and this is higher than many other countries in Europe. For instance, in Germany, they have just reached 50%. I think they are now 53%. The highlight company here is Visabeira. These characteristics of competitiveness of the Portuguese environment helps companies to grow and to follow opportunities. They train themselves. They strengthen their capacities in the home market. Our home market is small, but still. And then they gain the technical ability to move internationally, like the case of Visabeira and Construtel, who is in many different countries. And in the US, for instance, they are already operating in three states of the US. And they generate 2 billion euros from this line of business today. The submarine fiber optic cables have also been mentioned. A statistic that I read somewhere in a technical journal, it says that Portugal, as a digital connectivity hub, is hosting 25% of the submarine fiber optic cables that connect continents. Now, and look at what's coming as new investments. Our geographic location is unparalleled. And also the fact that Sines is a deep water port, which is not very common. It's not common at all to have a very deep port, enables the cables to be laid down in seabed right from the start, right from the moment they submerge in this submarine environment. The renewable energy, it's another sector where we excel and which has produced Portuguese multinationals, like the case of EDP Renewables and EDP. Portugal is considered a European leader in hydropower, wind, solar, and biomass. And in 2024, we don't have yet the numbers for this year, renewable energy supplied 71% of the country's electricity consumption. This 37 terawatts per hour is not a small number. The investments underway are increasing capacity of wind, solar, storage, and green hydrogen. And storage, in Portugal, it's not only batteries. Batteries is the future, but we have already storage, hydro recircling of water, hydro recircling to our dams. It's one way of storage. When we look at these companies, and the example I gave, EDP Renewables, the spin-offs of this situation is the path that we create for large green data centers. João Coutinho was mentioned this. Artificial intelligence is electricity, and it is green electricity. So we now are getting accustomed to large green data centers. We felt a bit surprised by the size of Start Campus. We have other areas, Atlas Edge in Carnaxide and other locations, but the spectacular announcement yesterday by Microsoft to invest Here in Lisbon, sorry, in Sines, not in Lisbon, in Sines, about $10 billion of an investment in data centers position Portugal in Europe as a place which is strategically important. It's not only economically important, it is strategically important, because what this gives us and what the energy transition that we have achieved in Portugal is that we achieved this by gaining energy security. We are one of the few countries in the world where transition to green energies go hand in hand with security. Why? Because we are not rich in terms of carbon. And those countries which are much dependent on oil and gas have to make a more difficult transition. You know, I would even say that we in Europe and in European Union policy, we spent a long time talking about energy transition, and we actually forgot completely about energy security. So the invasion of Ukraine by Russia was a wake-up call, but it was late. In Portugal, we are doing the transition. Somehow we are doing the transition and are advanced in this process. And this gives us security because we are not dependent on the oil from Russia or from Algeria or Nigeria. And that's an important point. And also this fact that we can actually follow the path for a green transition. The infrastructure, I have to mention Lisbon Expo 98. Some people thought it was an extravaganza. Then people said, yes, this is great. Then people said, unfortunately, we are converting this into a new area of the city. You know, everything was right. But the legacy of this enables us to gather more than 70,000 people in this venue. The Web Summit is taking place today. And in 2023, the youth the youth gathering under Pope Francis gathered in this location 1.5 million people. So this infrastructure was not possible, and this infrastructure is composed of many different other infrastructures like rail links, like auditoriums, like a bridge, one of the longest bridges in Europe, and so on and so forth. It's an area which is fun to live, where today almost 50,000 people live permanently in our city, in this particular quarter. Now the challenge is to finish. The challenges. First is competition for talent from other locations. Competition for talent for other locations. Portugal has been benchmarked, and today other locations in Europe and elsewhere are trying to better the conditions offered by the Portuguese government for visas, permits, and expatriate income tax. I've been to conferences where there are speeches trying to attract people to locations where they are doing investments, emulating. I'm not going to tell you the examples publicly, but emulating what we are doing. One European city is even building an infrastructure that I think, but this is Expo. This is like, it's not a World Exposition, but it will be an infrastructure to host large conferences like the Web Summit. So we have to be careful as a leader in this area about the competition. And the price hikes in certain services and in real estate are worrying, not only in real estate but in other consumption moments like restaurants. English schools have gone in price much faster than the increase in inflation. And why is this worrying? Because it creates imbalances, because sometimes people turn against tourists and against foreign residents, and this could create certain political and populist impetus that can actually spoil what we are achieving today. A major stumbling block is tax. The tax burden we all know, all that who pay taxes in this country. If we look at the corporate income tax, IRC, this, as it is today, penalizes company growth. So it invites companies to stay small. Large companies pay a proportionally higher amount of income tax. So this is an incentive to stay small. This is an incentive not to consolidate. This is an incentive for a group with 40 companies not consolidate these 40 companies in one sole company, but only to have them fragmented. When it comes to personal income tax, IRS, we know that the higher tax rate, which stands at 48%, and beyond a certain limit, it's as an addition. Let's say for a 100,000 annual salary, which is standard, the nominal tax rate is 48 plus 2.5, so 50.5%. And it's less because the marginal rate will bring this average lower, but it's still very high. And the point is not only the rate, it's how the rate starts. The rate starts at salary levels of 84,000 per year. This is a middle-level salary. And we reach the top level of income tax at the very low end of the spectrum. So the government policy is fixing this. We have heard our Prime Minister today, but slowly and not yet for the higher income earners. Direct investment flows. This is a very important point. We look at investment flows. Yes, they are extremely important. When it comes to inward investment in Portugal, there is a lot of difference between greenfield investment and substitution FDI. Greenfield investment brings new jobs, new technologies, new processes, the need for new talent, new exports. It's the case of an Auto Europa, or more recently, the cases that I'm giving in the data centers. It adds from zero to something substantial. When it is substitution FDI, it's just the owner that changes. Maybe a different way of doing things, maybe more competitiveness, more efficiency, but also the translation of headquarters where strategic decisions are made and where most value is created out of Portugal elsewhere. So substitution FDI is not as productive as greenfield FDI. The examples are there as examples. When it comes to outward investment from Portugal, this is also something which is relatively unknown, even for us Portuguese. Does Portugal have multinationals? Yes, we do. We do have multinationals. I'm giving you here a list of companies that are all of them multinationals. Some of them in more countries than others, but they all have investment outside Portugal, outward investment, foreign investment from Portugal, outside Portugal. So the examples are there: EDP Renewables, Jerónimo Martins, Galp Energia, Banco Comercial Português, Sonai, Navigator, REN, CTT, Corticeira Amorim, Altri, Mota Engil. Who are they? These are all the listed companies in Lisbon whose market capitalization is above 1 billion. And 5 of these have market caps above 10 billion. all these companies are multinationals, and some of them are really multinationals. And we also have companies which are not listed and which are large. I gave you an example, and are large and are also multinational. I gave you an example of Isabeira Constructel. By the way, one of these companies here is the only Portuguese company which appears in the Fortune Global 500. Here, the criterion is different, is revenue, is total sales. It's a more difficult criterion. But there is one Portuguese company. Our flag is there in the Fortune Global 500. Some countries in Europe, I would say about a dozen countries in Europe do not appear in this list. And we do appear in this list with one of our companies. Now, we need a strong capital markets ecosystem. Portugal needs more companies publicly listed, a pipeline of IPOs. We also need a stronger capital market ecosystem, helping companies grow at every stage of development, at the startup stage, scale-up stage, growth stage, and then mid-cap, and then large cap. This tendency to grow is natural. It's part of life. It's a living organism which is growing. Small is beautiful. Small is beautiful when we are a baby. Small is perhaps not beautiful when we grow up. So big is beautiful when it comes to corporate activity. Why? Because it gives us more means, more resources, more competitiveness, better ways of remunerating our workforce, and to pay our shareholders. So this growth is needed. For this growth, a stronger capital market is needed. The investor base should be stimulated to both institutional and retail, and invest in financial literacy from school is a must. From school is a must, and supporting pension funds would help. And that is all I have for you. The next slide does not appear. Okay. All right. So just a word of thanks for your attention, and a wish. We hope to see you soon. Thank you.
Thank you, Professor Ataíde Marques, for your closing remarks and inspiring words. And with that, we conclude today's conference, the opening chapter of Portugal Capital Markets Day 2025. On behalf of IAM, the Portuguese Issuers Association, and Euronext Lisbon, we thank all our speakers, sponsors, and remarkable guests, and also everyone who joined us via live stream for being a part of this special day. We hope to see you soon. Thank you very much.